another 6 months. Otherwise, there is no need to make any fresh entry. You may find it at more lower levels from here as well.
Focus towards F&O market. Let's get in Puneet to understand what's been buzzing there. Puneet, yet another day of fall that we are seeing on Friday this time around.
Well, consistent pressure this week, Somit, as you rightly highlighted, and even when you look at the stocks that are buzzing in trade today are also related to that. So while for the Sensex, it's bang on, consistent 27 stocks that are declining in trade today. You're seeing Reliance, Bajaj Finance, and Indigo continuing to be under pressure, while the auto pack, also led by Mahindra and Maruti, are also not doing so well today in trade. When you look at, of course, the Bankex also, that's been the other key factor. Consistent pressure there as well, failing to hold at that particular levels that we've been speaking about since the morning, both for Bankex as well as for the Bank Nifty too. So the private bank index yet to perform any moves, and stocks like HDFC Bank continue to languish. When you look at the stocks in the long build-up, essentially we've seen, Hutco as well as Godrej Properties continue to be so long build-up across on ONGC as well as LIC Housing. We're seeing short coverings on Oracle Financial as well as Sammaan Capital are the other couple of stocks. Long unwindings seeing on NBCC as well as PG Electroplast, and short build-up on stocks like Tata Motors PV, where you've seen that update coming in where a couple of weeks of production loss for JLR, while Sona BLW is also now on the list in that sense, where stocks broken yet again the psychological mark of 500 rupees and 480 is where there is a medium or small term support, at least near term support for this. So these are some of the key stocks that you should have on your radar as part of our F&O setup.
Right. Thank you so much, Puneet, for all the details. Well, moving on, let's talk about a global biopharma engineering player, which is Fabtech Technologies. Let's see what that stock is doing. The stock is up almost 15% in trade. And if you see, the stock is buzzing on the back of volumes. But what are the key triggers? Let's go to Jasmeet and find out the details about that.
Well, Varsha, thank you for that. This is a recently listed company and the stock has been tanking since the time of its listing. We look at what the company does. Well, company operates in global biopharma engineering space where they provide end-to-end turnkey solutions. While the company operates as a design-led infrastructure platform-based company where they take orders and fulfill it for their clients. If we look at the key areas where they serve the pharma clients, biotech and healthcare companies across India and globally. Currently, the stock is buzzing on the back of volume, which are nearly 21 times on a 20-day average. While the company also has presence in Middle East via the subsidiaries in UAE region. Now, if you look at the stock performance, the stock got listed at flat at its list issue price of 194 odd rupees, and since listing it's down 19 odd %. Over last 1 month, the stock has tanked nearly, stock is up nearly 5 odd %, but YTD basis the stock is down 19 odd %. Now, in terms of the Q3 key takeaways, Q3 saw a weak quarter. It was a complete opposite turnaround quarter for the company on YY basis, where the company reported a loss of nearly 5 odd crore versus a profit of 23 odd crore in the previous year same quarter. If we look at what did not work for the company was the overall project execution lumpiness. The delay in that led to the overall flattish top line and impacted the profits as well. Now, in terms of the key financials, the revenue was down nearly 39 odd % in the Q3 FY26, while the net company reported net loss of 5 odd crore. If we look at the outlook, the management remains pretty strong in terms of what they see the performance going ahead. They reiterate the FY26 guidance of revenue of 380 to 400 odd crores, while they also want the PAT to reach a 39 odd crores of profit going ahead, while currently it's at loss of 5 odd crore. Now, in terms of FY27 growth, the management targets a 30% YY growth in the coming year, while they also mentioned the PAT margin will be 9 to 11 odd %. All in all, we do see strong guidance, but the stock has been tanking in trade, but today buzzing on the back of heavy volumes.
Right. Thank you so much, Jasmeet, for all the details. Well, Astha, what's your view when it comes to Fabtech Technologies? Clearly, FY27 company has given a good growth guidance of 30%, but considering the valuations, what would you advise to investors currently?
Surely, because IPO came in September again and it was at the issue price of 191. So at that time also valuation was a concern because it came at a price to earning multiple of 30x. And I think with the kind of financial performance this company has posted in their Q3 FY26 number, it is not that very much impressive. We have seen a downfall in the profitability, or yes, it is almost a loss which we have seen. So not a very impressive counter to bet upon at this point of a time. Maybe the news flow has make this stock outperform in today's trading session. But we still want to see more clarity on their profitability. Maybe the Q4 of FY26 number will make a or will provide a clear picture. So rather than if anyone wants to take risk, then they can only make entry into this counter. Otherwise, I would recommend wait and watch if anyone don't want to take any sort of a risk, because even markets are not very in a very certain position right now.
Well, thank you, Asa. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, just before we end the show, let's get in Puneet to understand what's been buzzing with Likitha Infra. Why, Puneet, give us a go ahead.
Well, stocks, been up 23% in the last 5 days, but has been a lackluster counter since listing. Now, last 1 year, stocks are down 38% from the highs of almost 300 odd rupees. But even since the listing back in 2020, it's been an underperformer. Stocks trading at 170 now after today's move, but listed at just 120 rupees per share. So in that sense, has gone nowhere in the last 5 to 6 years. The company is engaged in laying off gas pipelines, as mentioned on your screen, and presence across the 20 states. So it has clients like IOC, GAIL, as well as BPCL. But within the segments, city gas distribution, cross-country pipeline projects are some of the key aspects that they look at. But overall, when you look at the current positions, there are two key aspects. A 925 crore order book where the market cap of the company is 688 crores. So you have to keep that in mind. And the other aspect that the 9-month FY26 financial picture has been quite weak. Revenue is down 10%, EBITDA is down 17%, and profit is down 32%. So post quarter 4, it will be a better aspect to look at the company in terms of financial as well as order book. But right now, stocks buzzing over the last 5 days on strong volumes at this point.
Thank you, Puneet. Thank you for that information coming in on Likitha Infra. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders.
Welcome back. You're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and take all your stock-related queries. So if you haven't already, do start sending them on the WhatsApp number that'll flash on the top of the screen. You can also call us, speak to us directly on your stock-related query as well. The number for that is the landline number that's flashing on the top of the screen alongside the WhatsApp number. There you go. So please call us for solving your stock-related queries on a day that's been largely negative for the markets today. So let's look at the heat map for the Nifty 50, continuing to be under pressure as we speak, and down almost 400 points at this point of time. We broke in 23,000 mark yet again. So it's been consistent pressure on the markets. 42 stocks of the Nifty 50 down in the red, and stocks like Tata Motors PV that continue to be under pressure on the back of reports claiming 2 weeks of production lost yet again for Jaguar and Land Rover because of supplier issues in the UK is having a beating down impact on the stock. Reliance, Bajaj Finance as well as Shriram Finance yet again are down in trade today. Shriram Finance started to build some momentum with the up move on Tuesday, but all of that has fizzled out very, very quickly. In terms of the sectoral heat map though, you are seeing pressure across the board yet again. So the PSU banking index started the day with losses of almost 2 to 3% and has continued to do so. Nifty Realty, Nifty Auto, the Nifty Bank as well. All these indexes that have done very well in the past before the war broke out have seen reversals, money being taken off the table, and that trend has continued as well. The Nifty IT just barely by a slice of thread at this point of time in the green, but the move continues to be weak. In the advanced decline ratio, you had almost 2,150 stocks that were down in trade today at the morning in the morning edition of Ask Profit, and that trend has continued yet again. So just almost a 7:1 in favor of the declines for today. Mid cap, small cap also reflect that pressure that's visible on the benchmarks, as well as some indication that we've gotten from the advanced decline ratio. So down 1.6% for both these indexes. And individual movers finally of the BSE 500 show you that while some stocks have done well, like the Graphite stocks, HDB as well as Graphite India, you're seeing an increase in global prices for electrodes, and hence visibly positive impact for both these players. But Supreme Petro also up 6%, ONGC and Oracle Financial after a while is up as well. But largely stocks down in trade today. Godfrey Phillips, Minda Corp, Spark, Uflex are putting pressure on the index. But let me welcome in Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal Financial Services on the technical side, and Radha Raman Agarwal. He's the Managing Director and CEO of Swarm Advisors at this point of time as well. I hope I'm pronouncing the name of the company right, Radha, but thanks so much for joining in today. Let me go across, take the first stock-related query that viewers you've sent us today. It is on Coforge at this point of time. Our viewer Siju from Qatar, who is a regular viewer, he's holding shares at 999. So he's bought it post the fall or just before that up move started a couple of years ago. He's holding shares for a 3 to 5 year horizon, holding 75 shares. Radha Raman, would you suggest Siju to continue holding these shares at this point of time given the correction, or is selling out and waiting for more clarity post quarter 4 results as a strategy that you would suggest? I think you're on mute, Radha.
It's on, I think. You are able to hear me?
Yeah, I'm able to hear you now. Go ahead.
So basically what suggestion would be more in terms of that we should be holding on the stock. There's already a correction which has happened, and I think IT is showing signs of giving a bounce back, and with the rupee thing as well. So I think it should be a good advice to hold on and then move ahead, and maybe wait for maybe additions into times to come and see the results of the fourth quarter, and then basis that decide that. But the current holdings one should hold on.
Got that view. But the next question that's coming in, it's from Sunil from Pune, who's also a regular viewer. He's holding shares of Vedanta. Now, Ruchit, he's holding shares bought at 655. We have the impending demerger in the near to medium term. What would you suggest him to do?
Broadly, what we have seen in last 1.5 months just seems to be a corrective phase within a broader uptrend. The major support for the stock is around 600 level if you look at some positional charts. So 600 to 620 is the range where I think the stock would find a good support. So on your existing positions, if you have some positional view, you can continue to hold on your positions and keep a stop loss below 600 on these long positions.
Got the view, Ruchit. But the next question that we're taking, viewers, you can also call us on the landline number on the top of the screen for stock-related queries as well, so that our guests can get first-hand of what your query is. It's coming from Mr. Ansari from Mumbai itself, and his question largely being a very, very long term. He wants to know, Radha, a couple of stocks that are on your radar that he can hold for a very, very long term, for a forever term is what he's calling it. Any spaces that you like for the very long term?
I think if you look at gold finance companies, that space is quite active, and that space one should be looking at. So effectively, the reasons is very simple, that the lending is quite secure. The gold prices have been moving ahead, and as when the gold prices move up, the LTV goes down, and that's an advantage. And in fact, if you look at from a retail loan book, I think that's a space which has been the most active if you look at last financial year. And I think going forward also, that space is going to be quite active with the secured lending. I think that space should be quite active, and I think going forward, gold always has a value, and gold financing will obviously take a lot of shape in India. So that piece is quite picking up.
Got that view, Radha. But the next question also coming in from Keshav from Chennai, Radha, towards you. He wants to know if Bharat Dynamics Limited is a key stock that he can have in his portfolio for the next 2 years. He's bought it around 1180, so very close to the current market price. What would you suggest? Radha, that's a question for you, yeah.
So I think BDL one should maybe take an exit right now. So more in terms of, I think with the ambiguity things happening, so it's maybe take an exit and then decide based on the quarter numbers. So that will be a good strategy in terms of Bharat Dynamics.
Got that view, Radha. But the next question coming in now, it's on Diffusion Engineers. It's a recent listing, and our viewer Raj from Jaipur actually holds shares at 265. So stock's trading very close to that price. He is asking if he should continue to hold on or exit this counter. Do you track this counter by any chance, Radha? If any, what should Raj do with this with Diffusion Engineers?
Frankly, we don't track this counter, but from a investment perspective, I think given the uncertainty, it's better that maybe we knock down few maybe related to pretty close to the cost price and wait for the uncertainty to get over. I think that's a better way of doing it in the given scheme of things.
Ruchit, any quick view that you might have on Diffusion Engineers Limited? And I know it's a very limited time frame, but any view on the stock?
Yeah, so not much historical data, but whatever short-term data is available, I think 290, 300 remains a major hurdle for the stock, at least for the near term. And until that is surpassed, the overall trend or overall momentum, I would rather say, does not look much positive. So I think we could see some time-wise correction or getting continued in the near term. But until the stock surpasses 300 levels, one should not expect any kind of trended basis.
Got the view, Ruchit. But the next question, and this is a caller for today from Vizag, and Mr. Rao has a stock query for us. Mr. Rao, good morning, good afternoon. Welcome to the show. What's your query?
Yeah, I wanted to know about Reliance Industries. Is it right time to buy now?
Sorry, which stock is that?
Reliance Industries.
Reliance Industries. And would this be a short-term bet or a long-term bet, Mr. Rao?
Yeah, I want to hold for 1 year.
For 1 year, got it. Radha, would you suggest buying into Reliance Industries at this point of time to Rao?
So I think we can look at a staggered buying in Reliance Industries today, although the stock is down given the news flow. But eventually, if I look at the sum of parts, I think with the Geo listing coming in, so effectively, I think it will be good stock to own. But he can buy looking at it in tranches to take forward. So maybe he can start buying in tranches, and then as and when things unfold, we should keep adding that.
Staggered in tranches is what Radha suggests, at least for Reliance Industries. The next question coming in from Arvind from Mumbai, who is also a regular viewer. He holds 2,000 shares of Canara Bank, Ruchit, at this point of time at 160. So he is at a loss of almost 60,000 rupees. Ruchit, he is retired. So his question largely being, can those levels of 180 come back of the stock maybe in sometime in 2027 or in this year? A slightly more longer term view on the charts, what would you suggest?
Yeah, I think if you have such long-term horizon, then you should continue to hold on your existing positions. We have witnessed a decent correction in last few days, mainly because because of the market corrective phase. Immediate support for the stock is of around that 128, 127 level. But if I look at a bit longer term charts, then major support is around 119, 120. So I think we might see some more dip towards that 120, but that would be a good level from where we can again expect the stock to resume its higher degree uptrend. So hold on your existing positions if you have next 1.5 years point of view. Around 120 you can review again if you want to average it.
Got that view, Ruchit. And let's go across to our next caller now from Andhra Pradesh. Prasad has a stock query for us. Prasad, good afternoon. Welcome to the show. What's your query?
Good afternoon, sir. This is Prasad from Andhra Pradesh. Sir. Hello?
Yeah, Prasad, I can hear you. Go ahead.
Sir, my query about Lemon Tree Hotels or Godrej Properties. Which one is better to enter fresh paying, sir, for long term?
For the long term, got it. Rather, Lemon Tree Hotels in the hotel and hospitality space or Godrej Properties? Which one is a preferred, if not one, both of them, is it preferable at this point of time for Prasad to enter for the long term?
I think Lemon Tree will be preferred over Godrej Properties because I think it's come to a correction phase. The hotel is doing well given the sector it operates in. We have seen a correction, and effectively, once I look at bounce back in terms of coming in, there's a lot of leisure and corporate travel in that segment, and with this tier 2, tier 3, tier 4 kind of a backup in this. So Lemon Tree looks good in terms of accumulation.
Got that view. We also have the impending demerger and the asset-light business model that Lemon Tree will be adopting very soon. So continue to monitor this stock at that time as well. But go across to our next query. This one's again from Mayur. He's holding 45 shares of HDB Financial, bought since the IPO price, and that was almost at 740. Stocks broken the 600 mark yet again today and trading downward. He has 45 shares. He's asking what he should do, Radha, for the long term. Would you suggest buying right now as an opportunity? Is it a good time to accumulate?
If you also hold it slightly for long term, you can still hold, but not no suggestion to add. I think the stock has not done well in the post listing, and there are other good NBFC players available in that space. And I think that will be better rather than maybe adding here. Maybe for slightly medium to long term, we can hold on, but not do any average out or maybe adding at the current levels.
And Radha, if you can suggest a couple of names also that's on your radar in that NBFC space, because of course this is towards a lot towards the CV cycle, and a lot of those stocks like Shriram Finance also are not doing well right now. So anything that is in the NBFC space that's on your radar?
So I think I mentioned the gold finance companies can be looked at, maybe the top 2 or 3 of them. That can be added given the uncertainties involved. And given the gold finance companies have we get big advantage in terms of putting it forward, I think those would be good bets to add on at this moment.
The next caller also dialing in from Hyderabad now. Venkatesh has a stock query for us. Venkatesh, good afternoon. Welcome to the show. What's your query? Hi Venkatesh, can you hear me? We seem to have lost Venkatesh, but we do have a stock query on our screen right now. He's bought into Mazagon Dock, seems to be at the current, very close to the current market price. Ruchit, on Mazagon Dock, what would you suggest? It's been a volatile counter. Should Venkatesh continue to hold at this point of time?
The overall trend has not been positive if you look at last 4 to 5 months, along with the other names from the same sector. But one stock which has relatively fallen less or has shown a relative outperformance within the defense space is Bharat Electronics. So I think in case of any kind of recovery in the defense sector going ahead, BEL would be one which can take the leadership. And also in terms of the corrective phases, I think the relative outperformance could continue. So I would suggest to take a shift from Mazagon Dock to Bharat Electronics if you want to stay within the same sector.
Got that view, Ruchit. The next question now coming in. This one's on Sagility, and Jay Krishnan from Kerala, actually, Ruchit, is asking a 9-month view on the stock. And he is, of course, a regular viewer, likes the 9-month period quite a bit. But we had, on the fundamental side, Ruchit, analysts meet takeaways. On the charts, is that momentum visible? Is this a new bottom for the counter?
So the stock is trading around its medium-term support. 36 is a good support for the stock, and we have seen a pullback in the last couple of trading sessions from this. I think the risk-reward issue is definitely favorable if you look at next 6 to 9 months perspective after the recent correction. So you have positions you can continue to hold on. On the high side, 48 to 50 would be the range to watch out for when it comes over there, whether it takes resistance there. But at current levels, I think yes, you can hold existing positions even if you want to go create fresh longs. Then keeping a stop loss below 34 rupees, you can attempt fresh longs as well.
Got the view, Ruchit. But the next counter that we're focusing on is PFC. Now, Lalita from Bangalore, who is a regular viewer, holds shares at almost 416. Currently sitting on a slight loss. Asking what she should do at this particular juncture. Ruchit, what would you suggest? Is the arbitrage playing between PFC as well as REC at that point of time, and which one is a better counter according to you?
I think PFC seems better if you do comparative analysis within both. But I would also suggest to keep a strict stop loss below 380 on your existing long positions. The stock is in a consolidation phase since last 1 month. The good thing is that this entire sideways move which you have seen is above its 200 EMA support. So the mid to long term momentum seems to be on the positive side with 200 EMA acting as a good support. So till it is above 380, I think you need not worry much. You should get a good exit price once the dust settles in. But with a stop loss below 380, I would recommend to hold on PFC only.
Got it. So 380 is the level to watch on PFC. But viewers as well as Ruchit and Radha, time now for the rapid fire round in this edition of Ask Profit. Please keep your answers on buy, sell and hold so that we can take as many in the next couple of minutes. The first one's coming from Ramesh on Paras Defense. He's bought shares at 713, Radha. Should he continue to hold, average down at the current market price?
No. Sell.
Sell, got it. The next query coming in is on VMart, bought at 542. Ruchit, should he continue to hold his 80 shares is what Sushant is asking.
Sell on right should be the strategy.
Next one's coming from Vignesh from Bengaluru. Now he's holding shares of Electro Steel bought at 180. Ruchit, any quick view on the stock that you might have?
Trend is negative. We have seen some pullback. 200 EMA resistance would be around 88. So you can look to exit around 88.
Zaggle bought at roughly around 300 rupees per share by Giridhar. Would you suggest him to continue holding rather at this point of time?
I think we hold on to the stock, but not add.
Happiest Minds bought at 450 by Lavanya. She wants to know what she should do with the stock now. What would you suggest, Ruchit?
Hold with stop loss below 360.
The next question coming in is from Bharat from Andhra Pradesh, holding on to Quality Power at 916. Recent listing yet again, Radha. What would you suggest for this counter?
I think you should hold on.
Hold on, got it. Srinivas wants to know a short-term view on Jupiter Wagon, Ruchit. He's bought it at 305. What should he do with his 200 shares?
The short-term trend seems negative, so look to exit on any pullback moves.
CC Avenue, also Infibeam earlier, Ruchit. Our viewer has bought it at 16 rupees per share. Should he sell out, move out of this counter? What would you recommend?
There's no positive signs yet, so I would recommend to take an exit.
The next one coming in is from Ravi from Qatar. He wants to know about HDFC Bank, bought at 923. Is it a good time to accumulate more rather right now?
I think he should exit. Given the news flows, he should not take a call.
Any view on Geo Financial, Ruchit?
Seems we would see some consolidation in the near term. If existing positions are there, should hold on.
Petronet LNG, is there a similar view that you have, Ruchit, on the charts for this one?
No, the short-term trend is negative. We have seen volume-based selling, so it can correct towards 225.
The next one coming in is on ITC Hotels. What would your view be on this one, rather at this point of time?
I think it's a good add to the extent.
Aisha Motors is the other one. What would you suggest for this counter as well, Radha?
I think it's also a decent add at this price point.
The next question coming in, it's on Sirma SGS. Is it a good time to add more, Ruchit? Is the momentum continuing on the uptrend?
Hold existing positions. Any dips towards 720 could be used as an opportunity to add.
SBI is the other counter. Is the momentum on the upside done, or should he continue to hold right now?
I think he should continue to hold.
Ruchit, sorry, you can also go ahead with we'll get both of you on the last talk for today.
Yeah, so 200 EMA support will come around 970. So I think if it comes towards 970, it would be good levels to add on.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Ruchit as well as Radha, thanks so much for helping us solve all your stock-related queries. But viewers, all the time we have on this edition of the show. Thanks so much for watching and sending in your queries. Do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 20
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. And Hiral, it seems like it's the midweek market holiday. The bulls took leave yesterday, obviously, like everybody else, but they didn't come back today.
Exactly, they've not come back. When will they come back is the question, because
next week is also several holidays, right?
2 holidays, so it's a truncated week next week as well, so volumes are going to be thin, but we are at the day's lowest levels on Nifty 50. We've broken below that 22,900 mark, and that's what we need to, actually take into consideration. A 400 points downtick right now. 1.8% there, and your broader markets are pretty much in tandem with what Nifty is doing. I think the cuts are deeper when it comes to Bank Nifty, 2.5% shaved off in terms of banking majors, Alex.
Yeah, absolutely. Let's pull up the heat map for the Nifty 50 and we'll tell you about what is moving the needle. So mostly right on the screen, just about 7 stocks in the green holding out, right? ONGC, TCS, Wipro, so the IT majors, but a few of them have actually fallen into the red, whereas earlier on at the start of trade today, you had gains on the screen for a few more of the IT majors. What else? On the losing end right there, I think the stock of the day, Tata Motors PV, but also Reliance Industries losing quite a bit of ground. And if you look at the contributors chart, which we should do next, you will see HDFC Bank, you will see Reliance Industries. Let's pull up the contributors chart, because there you go, those 2 counters right there, the heavyweights, and followed by the other banks. So 3 banks out of 4, 3 banks and 3 frontline banks losing ground.
And to look at the opposite side of it, there's not too much weightage which is trying to give support at all. I mean, 18 points is nothing. So you know where we are actually headed to with this kind of a closure in trade today. Go on.
The other thing is, I want to pull up the intraday chart for the VIX, because the India VIX is at 26 plus. At least last I saw it, it's heading towards 27.
and it's up as much as 8%. So that elevated volatility, Hiral, heading into the weekend.
Elevated volatility here. Let's just pull up the advanced decline ratio and then we should look at the broader markets as well in terms of the components. The advanced decline ratio, categorically the mouth is widening. Not to that extent, the greens are still only 300 versus 2,200 declines, pretty much where we started off. So there is that bearishness which continues in terms of where markets are concerned. And in terms of components of NSE 500, let's just look at that and see what's happening. I mean, a gain of what, 4 to 10%. HEG, Graphite India are the ones which are seeing some smart moves, but ONGC again, it's a crude beneficiary. What's losing out is a Spark, PCBL, Ease My Trip, Godfrey, Mahindra Life. I mean, it's a whole host of sectors. There's no particular direction that you're seeing in terms of BSE 500 as well. So that's what the market picture is looking like. But let's quickly look at the factors we should be watching out for. First up, the 2-day winning streak is what Nifty 50 has broken. That's clearly evident from what you're seeing in terms of the chart. And we've fallen as much as 400 points in trade. Your defensives, which is IT and pharma, these have been the only saviors in the market, but they've also kind of given up the kind of gains that we were talking of at the start of the session today. Banking majors clearly underperforming the benchmarks, and that was seen from the contribution that HDFC Bank, SBI and ICICI Bank are giving to Nifty 50 on the downside. Your PSU banks have been the top sectoral losers in trade as well. 22,900 now is acting as the clear support level, which has already been broken. So we know where we are headed from here on. Below 22,900, the bearish structure is something which is reconfirmed, and the resistance now is coming in at levels of around 23,000, which is a psychological resistance. And after that, the next level you should be watching out for should be 23,100. Now, clearly, it is a dull day of trade. For the last 2 hours, the market has been range bound, and we're talking about a range between 22,900 to 23,000. So it's just 100 points range that we're talking about. And very lastly, your cash market turnover is down 10%, very similar to what we saw in terms of Wednesday's session, while the F&O market turnover has been flat today, which was also under pressure, which was down, I think, 10 or 15% on Wednesday's session as well. So that's what the picture is telling you in terms of the setup so far in that last hour of trade. Let's get in our guests. We have Kunal Shah from Mirai Asset, Sher Khan and Samir Dalal who are joining in. Welcome to the show, Kunal. Let me take my question with you. With the way the setup is right now, clearly we have entered that bearish tone in terms of markets. 22,900 is what we've broken as well. What are you watching out for? Because again, next week is a truncated week.
Good afternoon to everyone. So I think this was a little bit unexpected from the markets as well. We had surpassed the hurdle of 23,000 on the upside, and then we headed towards 23,400 mark. We were expecting this move to at least continue towards the mark of 24,000 on the upside. Now again, the support, as you have mentioned, 22,900 has been broken on the downside. Your India VIX has again started to pick up, so there is going to be volatility as well. Even today is the weekly close as well for the Nifty index. Again, we are going to have a doji candle indicating indecisiveness. So I think better not to carry any positions, whether on the long side or on the short side, because there are gap ups and gap downs that is likely to happen even on the Monday's trading session. However, said that, I think approach for the Nifty index should be taken on a daily basis. Firstly, I'll be watching out for the 20 hourly moving average for the Nifty index. That is placed at 23,050. Till the time that is not taken out, I'll not be aggressively on the long side. So we will be cautious at the current levels. I will not even say be aggressively on the sell side as well. Yes, the undertone is on the bearish side, but I'll probably wait and watch, not take a trade on an index and go for the weekend. Similarly, for the Bank Nifty as well, I'll again wait and watch. Even for the Bank Nifty index, I was expecting this move to continue on the upside towards 55,000. Again, unexpected, that has happened today. Even for the Bank Nifty, any bullish trade to be taken has to be only above 53,000 on the upside. If that is taken out, then one can probably go aggressively long on the Bank Nifty. At the current levels, even Bank Nifty on the weekly chart is forming a doji candle, again clearly indicating indecisiveness. So there is no trade on index perspective. It's better to avoid the headline index at the current levels.
It's one step forward, 3 steps back for the Indian equity markets. And good afternoon to both of you. Samir Dalal joining us as well. Before we go to Samir on some of the key stocks of the day, let me come back to you though, Kunal, on individual stocks that you're seeing. Are you still seeing opportunities?
I think very few. First stock what I'll look on the long side over here is Glenmark. Again, looking technically strong on the chart. There has been a rounding base formation on the technical charts and follow buying momentum is what we are seeing. So good opportunity to add on to the stock on the long side. 2175 is where it is currently trading. One can buy this with a stop loss of 2100 and looking for targets of 2270 to 2300 on the upside. So Glenmark is one stock which is looking on the buy side. On the sell side, I'm looking for a sell opportunity, and that is on TVS Motors. So TVS Motors in the previous week had already given us a rising trend line breakdown, and the stock has entered into the corrective mode. It has been taking rejection at the 20 DMA, placed at 3568. So that is a sell for me at the current levels. 3476 is where it is currently trading. One can keep a stop loss of 3600 on the upside and look for downside targets of at least 3200 to 3160 on the downside.
All right. The stock that we've picked for stock of the day is actually a stock that Samir has quite a clear view on. So we'll come to him in just a bit. Let's first lay it out though. It is Tata Motors PV. It's trading at very close to the low point of the day and seems like bad news for this particular counter does not seem to stop. And in the latest, of course, Jaguar Land Rover has reportedly decided to shut its Solihull facility for a period of 2 weeks. This is partly what was already planned, but there's more at play. Let's go across to Puneet to give you a sense of why this is important. Puneet, this is only the latest in a spate of bad news, and this is on the back of a pretty bad quarter as well. Why is this important?
Well, thank you for that. It's definitely the third such instance where we're seeing a production cut for FY26. So temporarily suspended production at one of its plants in the UK for 2 weeks is where the suspension is. And the reason that the company has mentioned is because of a supplier issue. Now, bad news, as you rightly mentioned, Alex, continues to follow the company because you've seen that the affected area is also affected timeline is likely merging with the pre-planned Easter holiday timeline as well, but they will still lose about 7 to 10 days of production in Q4 as well as spillover to Q1. Now, this comes on the back of an impact that we saw in the month of August as well as September for the company in terms of a cyber attack where they lost 1 month's production of almost 50,000 units, which was split between a couple of quarters, Q2 and Q3, and that itself cost roughly £260 million of lost sales as well as expenses that the company added. Now, apart from that, also 2025 in April is where they lost production because of the tariff impact. So cars were stopped essentially from the UK going into the US and hence the impact. But when you look at the slump, now this is from November till February of 2026. It's while the numbers have actually gotten better post the cyber attack, you've seen still a 19% fall in Feb 2026 versus 37% fall in the month of November. And the sales, which is expected for FY28 for Jaguar and Land Rover in a single financial year, will not be even close to what they did in FY25. So they did almost 4 lakh units, a number that they did consistently since FY19. The estimate's only 3,80,000 from multiple brokerages, and this is an average summation of that number. So the next 3 years seem very difficult for the company. The first one we've seen in FY26. And that's largely the picture, Alex, because the next 3 years also, the sales are not going to recover back to the FY25 mark. And this year is very imperative, a new CEO with PB Balaji, but also the whole makeover of the Jaguar brand going all electric.
Okay, this is an interesting development. Thank you so much for that, Puneet. In fact, let me take this one with Samir. Samir, Tata Motors PV has been one of your favorites as well. How are you looking at it now with JLR again holding production? And as Puneet brought to us, the kind of impact it could have in terms of production. What would you have to say on this one? Would you have a change in opinion?
No, I don't have a change in opinion. I still remain very, very bullish on JLR and Tata Motors PV. And let me give you my reasonings, okay? So why have they cut production? We obviously know that there is a massive slowdown in the Middle East when it comes to sales of cars because of the issues that are happening out there. So when you have a situation where you're not able to sell, there's no point producing and holding on to inventory. We do not know when the recovery will happen because this could be a little prolonged, right? But having said that, are we of the opinion that this war is like a never-ending war that we have in Ukraine and Russia. I think that's highly improbable because I'm sure Iran is running out of ammunition. And at some point, the US is also going to say that the cost is not worth what they're putting in at this point of time. So it has to come to an end. Whenever it does, what you will see is slowly things will start to stabilize in the Middle East. And eventually, maybe 2 months or 3 months down the line, you'll see a demand uptick, and then you'll see a backlog of uptick also. So you'll see a sudden spike. Now, JLR in the current year has gone through a lot of problems. In Q2, they faced the cyber attack because of which production stopped. The resumption of which started in Q3. So, a lot of the negatives have come into the system in the current financial year. So the year has been a washout for them. Are we saying that this kind of system is going to keep happening for them going forward? I don't think so. So when the recovery starts happening, which we think will be maybe a month from now or maybe 2 months from now, what you will see is people will start looking at it from a different perspective. So you're getting it at a decent value. If you look at normalized earnings, barring the one-offs that have happened in the current financial year. So that is the first point. The second point that I want to make is that we got to realize that it's not, we are focusing on Jaguar Land Rover, but it is not only them, it's all over the world. Production is going to get affected for cars, including the others, Mercedes, BMW. We just don't discuss them as much because we don't have any exposure to them here in the Indian market. So this is an industry phenomenon. This is nothing specific to Jaguar Land Rover. And if they can use this time to get their refurbishments and plant maintenance done, all well and good. So it helps them when, production is up and running, they don't need to take a shutdown. So I don't look at it as a massive negative. We still have to look at things from a longer term perspective when you're a fundamental analyst. Right now when I'm talking and the stock is going through this pain and, the profits are looking weak, everyone is probably wondering why is this person being so optimistic? But a year and a half from today, when actually things are stabilized and things are growing and the stock is up, that's when people, the whole world and the bandwagon will come jumping in.
Sure.
And you'll have the opportunity.
Okay. All right. So positive, and there's quite a bit that has to change for Jaguar Land Rover over the course of next year as well, not least of which is the transition that Jaguar itself is making towards electric vehicles. Kunal, I want to come to you on a couple of frontline stocks, HDFC Bank and Reliance Industries. Reliance Industries in particular is now among the top losers on the Nifty 50. In fact, if anything, I'm going to try and find out, it's the third biggest loser with cuts of 4.8%. and proving to be quite the drag on the benchmark, and HDFC Bank not too far behind. In fact, close to 20 constituents of the Nifty 50 are trading with cuts of over 2%, and quite a few of them are losing over 3%. So what's the call on these two heavyweights? That's practically 20% of the benchmark as losing between 3 and 5%. You're on mute.
Sorry, firstly for Reliance, the stock had already made a double top somewhere in the month previous, where it was in January, where the stock had made a double top formation. Post that, we had seen the correction starting in, and now we are facing this rejection at the weekly 20 moving average, that is 1430. So till the time that is not taken out on the upside, there will be no buying momentum that would be coming back. There was consolidation which was happening on the lower levels, and then again we have seen a breakdown. So I think the recent low of 1300, what Reliance had made, that will be very important. If that is breached on the downside, then you can expect a gap area to be filled on technicals on the downside towards 1180, 1190 zone. So I think I'll not be a buyer at the current levels for Reliance. 1430 is something what I'll be looking out for. If that is taken out, then probably one can go aggressively long on Reliance. But overall, the long-term structure still continues to be on the weaker side.
Fresh lows for the rupee in the meanwhile, and we continue to head lower, possibly closer to that 95 mark, as unprecedented and unexpected that would have been even last year when the tariff conversation was front and center. We weren't thinking about 95 on the Indian rupee, right? So it is a balance of payment issue, and the fact that the government is taking steps to curtail the impact of higher crude oil prices currently. But let's go across to Somit Sarkar with what the chatter from the dealing rooms is. And it seems, Somit, that just over the last half an hour, 45 minutes or so, the selling has intensified. What is the word from the dealing rooms?
Well, the sentiments are not at all optimistic given the fact that there is no clear direction firstly in the market, and these 2 days of gain and then 1 day of big loss, that has led to much more losses for retail investors and for dealers as well. Hence, the sentiments are not at all optimistic throughout the broking rooms that we are seeing. And if we close below 22,900 today, then this clearly reaffirms the fact that overall the structure or the market continues to remain quite bearish. So closing about 22,900 would be crucially important for the market in trade today. Few stocks still which dealers have highlighted where there are some flows that they are seeing. Firstly, when it comes to Tata Consumer, they are indicating that there are some DIs who have been actively buying this counter at lower levels in trade. Delivery volumes could be as well on the higher side. So despite the weakness that we are seeing in the market, that stock is down just 0.3% in trade. LIC Housing, that has been on an uptrend. Strong buy flows on the FI desk is what dealers have highlighted. Cheaper valuations, and if there's a potential repo rate hike, then this counter could benefit out of that. And that is also one of the reasons why there are some buy flows when it comes to LIC Housing Finance. For Newland Labs, there are buy flows on PMS desk. Dealers are indicating that the export data for the month of March is quite strong for this counter. So it will be interesting to see how these numbers pan out post the March, and these numbers will come out. So it will be important to track, but early signs are that the March numbers would be quite strong for Newland Labs. And lastly, when it comes to Page Industries, there are some buy flows on the large HNI desk at lower levels. Dealers indicate that management in one of the conferences has maintained its guidance and they are expecting a double-digit growth on the revenue front and margins to be anywhere between 19 to 21%. They have reassured their guidance, so that is one positive commentary is what dealers have highlighted, and hence there are some buy flows at lower levels on the large HNI desk.
Got it. All right. Thanks so much, Somit, for getting us those details. So Page Industries, Newland Labs, LIC Housing and Tata Consumer on Somit's radar with regard to what he's hearing as a buzz from the dealing rooms. Let's go across now to Alistair Newton, Chief Executive of Alavan Business Advisory. He's joining us live from Zambia. Alistair, thanks so much for taking the time, and good afternoon to you. What's the perspective on what is happening, first of all, in West Asia, and what's the sense that you're getting? I'm not asking from a geopolitical sense, I'm asking about how the market as a whole is viewing this, because it's not seeming like it's going to be a conflict that gets resolved very quickly. Is that being priced in?
I think you're right that this conflict is not going to be resolved very quickly. I also don't think it's being priced in properly. First of all, obviously we're seeing a lot of volatility in oil markets, and that in turn is driving volatility in both equity markets and bond markets globally. We saw after Donald Trump extended his deadline for the Iranians to agree to what I think is a Hail Mary 15-point peace plan, we saw oil drop by about 6% last night. It pushed WTI down below $95 a barrel, which seems to be some sort of pain pressure point for Donald Trump. Every time we see WTI, which of course is his major metric, going towards the 95 to 100 band, he seems to come out with some emollient statements. Now, WTI has gone back up again since he spoke yesterday. I think that could be in anticipation of a pattern which has evolved over the previous 4 weeks, that Mr. Trump always seems to be taking a hard line over weekends when markets are closed, and then being more emollient on Monday morning after markets open up again in Asia. We may well see that pattern repeated over the course of this weekend. Let's keep in mind that yesterday he did also say that if Iran didn't agree to a cessation of hostilities, the US would become Iran's worst nightmare. The other thing which markets are not taking sufficiently into account, in my view, is Lebanon. There is a huge conflict going on there between Israel and Hezbollah. And although markets are saying, well, there's no oil there, so why should we worry? I think investors need to be very mindful of the fact that the IRGC is standing shoulder to shoulder with Hezbollah in Lebanon. Iran will not sign any sort of peace agreement, cessation of hostilities, ceasefire or whatever, as long as Israel is attacking Hezbollah and the IRGC forces in Lebanon. So the Lebanon conflict does have a very direct bearing on what happens in the Strait of Hormuz.
Okay. Alistair, good afternoon. This is Hiral on this side. Everything said and done right now, the key question is, what should someone do when it comes to reacting to markets? Because one, either you sit on dry powder. Two, you can probably start deploying because you're off those highs in terms of valuations as well. And the third option is just wait and watch. I mean, what's your advice to investors then?
Well, first of all, I'm not a market strategist. I'm a geopolitical strategist. So your viewers should feel free to disregard anything I say on account of how they should play it from a market perspective. Clearly, we do need to continue to try to anticipate what Donald Trump is going to say next on Truth Social or whatever, because markets are moving according to the Trumpian rhetoric to a significant extent, particularly as I intimated in what I said a moment ago, oil markets in the first instance. A second marker I would point to, however, which I think has been quite well documented by those who are more expert than I am when it comes to bond markets, is that the administration in Washington also seems to get nervous whenever the US 10-year starts to approach 4.5%. Now, I know that there is this idea that Donald Trump reacts to equity markets, but let's look at Donald Trump's pre-political career as a realtor. If there's one thing he really understands, it's debt. And I do think he is perhaps even more susceptible to bond markets going against where he wants them to be, US interest rates in particular, of course, than he is even to equity markets. And I think we've been seeing that as a pattern since the so-called Liberation Day on 2 April last year, nearly 12 months ago now. I think Donald Trump is susceptible to adverse movements in US treasuries. And I do think that market participants need to be keeping an eye on that as well, perhaps even more so than equity markets. So oil and bond markets would be my two markers for market participants to follow very closely, trying to keep ahead of the curve on both counts and looking out for what Donald Trump comes out with, or indeed Scott Bessent for that matter, which may be designed to, shall we say, make sentiment more favorable from a US perspective.
Thank you, Alistair, for that and being gracious enough to respond to a market question when your expertise is more in terms of geopolitics. And to tie that up with it, my question to you is now, from here on, how are you seeing escalation to de-escalate, as a strategy? Because that's what everyone is talking about when you talk about what Donald Trump is doing, how the GCCs come and play their role as well, because they have been the ones who've been called a very neutral land, which no more is the case, it seems. And then when India comes into the picture, how are you looking at India's position as well in terms of being a negotiator?
Well, let's deal with the last part first. There's quite a few countries running around at the moment trying to act as mediators. Pakistan, Turkey, Egypt, I guess the Omanis are still in the mix somewhere. I think the problem with acting as a mediator right now, be it India or one of the countries which is already engaged, the practical problem is that the Iranians are not ready to call a halt, even if Donald Trump is, and that's an open question to which I'll return. And furthermore, Benjamin Netanyahu is not ready to call a halt at this stage. I think there has been a certain amount of rhetoric over the course of the last few days, which has been suggestive of this idea that Donald Trump can call a halt anytime he wants to. He can't. I don't think he necessarily has the wherewithal to stop Netanyahu, let alone to get the IRGC, who are calling the shots in Tehran to all intents and purposes, to agree to a ceasefire at this stage. We've seen their rejection of the 15-point plan already. So this basically leaves Donald Trump to come to the first part of your question with two options. It's either escalation or capitulation. And I include in capitulation something he hinted at about a week ago, which is that he may just walk away from all this. It's not impossible that he would do that, declaring victory along the way, even though there is a respectable body of opinion in my area of expertise, geopolitics, which says that as long as Iran controls passage through the Strait of Hormuz, America has effectively lost this war. And let's keep in mind, too, that escalation and ultimately capitulation in some way, shape, or form are not mutually exclusive. There are more US ground troops moving into the area. I think it is still the case that nobody can call how this is going to end with any degree of certainty, or indeed when it is going to end. But I do think there is a better than 50% probability that things are going to get worse before they get better, not least from a market perspective.
A quick last question. I'm just squeezing one in, even though we're out of time, Alistair. But what is the worst case scenario, in your opinion, in the next week or so? You've pointed to the buildup of ground troops. They've been deployed from the US, and that presence has been building, even as we have a so-called cessation of targeting of energy infrastructure that was announced overnight by Donald Trump. What is the worst case scenario, in your opinion?
Worst case scenario, in my view, is that the Americans or the Israelis do something which provokes Iran into attacking desalination plants in the GCC countries. This is the biggest fear of the GCC countries. They are highly dependent, just on humanitarian grounds, let alone economic, on their desalination plants. If we were to see an escalation into wholesale attacks on desalination, this would be massively worrying. And I think in those circumstances, you would see a very big market sell-off indeed.
Alistair, always a pleasure. And I'm going to put it out there. I would love to speak to you again. And given the way that this conflict is going, I'm pretty sure that we're going to have to talk again, because our viewers will certainly benefit from your insight. Thanks
well,
so
I'm
much
very happy to do that, but you realize that you may actually be having to get me to say, well, I was completely wrong when you spoke to me on the 27th of March. Such is the uncertainty out there.
I seriously hope that that is the case and the conflict gets over by next week, in which case I will call you to congratulate you. Thank you so much for taking the time.
Okay, thank you. Bye.
Bye. All right, well, on that note, I'd like to thank both our experts, Kunal and Samir, and apologies to the both of you, because that last conversation I thought was relevant, and to have a longer conversation on that, right? So thank you so much for taking the time, both of you. Okay, let's talk about one of the major stories of today, and this is reacting to the fact that oil prices have remained elevated, and the government announcing that it is revising its fuel duty structure, cutting the special additional excise duty on petrol and diesel by 10 rupees each. This is a measure to protect the consumer. First, let's listen in to Finance Minister Nirmala Sitharaman speaking about the government's announcement. Listen in.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें, और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं, और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में, अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
Okay, so that's the word coming in from Finance Minister with regards to where the excise duty cut goes. But let's understand the impact now from Somit Sarkar. Somit, impact one in terms of OMCs and the exchequer.
Well, definitely this news that has come in is quite positive for the oil marketing companies. But there are two reasons why oil marketing companies are still not sharing this reduction in excise duty of 10 rupees per litre. Firstly is the fact that one of the private players, Canara, has hiked energy prices or petrol and diesel prices by around 3 to 5.3 rupees per litre. Now, Canara has a market share of around 8.3%, and the second one is the losses on the marketing margin side when it comes to petrol and diesel still continue to be on the higher side for the oil marketing companies. Dwelling firstly on the first point, now Canara has hiked the petrol and diesel prices, and they have a meaningful market share of around 8.3% in the retail fuel market. So what will this do now is that there will be more market share shift towards oil marketing companies. Now on a normal day, this would have been a quite positive news, but today the fact that they are incurring losses on sale of every litre of petrol and diesel, and if more market share shifts towards the oil marketing companies, then the losses for them will also increase going forward. So that is one reason why oil marketing companies are actually not cheering this reduction in the excise duty. And the second one is, as I mentioned, that the losses continue to remain on the higher side. And now earlier, as per analysts, the marketing margin loss stood at anywhere between 43 to 49 rupees per litre, and this 10 rupees reduction in excise duty will reduce the losses by just 20%. Despite this, the marketing margin loss continue to remain on the higher side of around 33 to 39 rupees per litre on blended basis, which means that by selling every litre of petrol and diesel, they are incurring a loss of anywhere between 33 to 39 rupees. So these are broadly the two reasons why why oil marketing companies are actually not cheering this reduction in excise duty, and this reduction in excise duty will have an impact on the government's financial as well. On an average, India consumes close to 170 billion litres of petrol and diesel on an annual basis, and this will lead to 1.7 lakh crore of loss for the government on an annual basis, which is nearly 5% of the gross revenue for the government. But again, these numbers are on annual basis. Now it remains to be seen for how long this reduction in excise duty prevails, because then that will decide what's the actual loss that is coming in for the government of India.
Thank you, Somit, for that. In fact, let's get in Prabal Sen from ICICI Securities. Prabal, welcome to the show. Hiral on the side. My question to you is, how are you seeing this benefit in terms of where OMCs go in terms of the financial impact? Because I was just reading right now from the press release where they're saying at current international crude prices, the under recoveries stand at approximately 26 rupees per litre on petrol and around 81.9 on diesel, and the combined daily under recovery, which is being absorbed by OMCs, is approximately 2,400 crores. And the excise reduction offsets rupees 10 per litre of those losses, ensuring that OMCs can continue to supply fuel without disruption while keeping retail prices unchanged. If you have to take this 2,400 crore rupee number into consideration, what do your calculations actually tell you in terms of impact?
So first of all, I think, the under recovery number that you mentioned is probably based on the Indian basket of crude. It is important to remember that the Indian basket of crude has a substantial weightage for Dubai and Oman crude, which is not really the price that is being paid, because those crudes are not the ones that are being purchased right now. Dubai and Oman, till about yesterday, were trading at a $50 premium in the physical market to Brent, if one has to rely on published numbers. And therefore, it sort of probably increases the under recovery number slightly more than what it should be. Having said that, I think I completely agree with what little I could get of Somit. I couldn't quite hear the audio, but what I could see was that, the number mentioned was 48 odd rupees on a blended basis. Our numbers pre this change were also closer to about 40, 42 rupees. And therefore, with this reduction, excuse me, the incidence of these retail margins is obviously reduced to quite a extent, but it still remains fairly significant. So as of now, with GRMs being what they are and with retail margins being what they are, I still think that OMCs are not really out of trouble. I think their numbers will probably still be in negative territory if you look at integrated margins on a per litre basis. Numbers that we have, at least for the last couple of weeks, against a normalized level of between 7 to 9 rupees a litre that companies make, start IOCL being the highest and HPCL probably being the lowest. Those numbers are trading at about 15 to 20 rupees negative at this point of time.
That makes sense. So Prabal, you've put the numbers into perspective. My question then to you, and good afternoon, this is Alex here. My question is that in the price? Because the stocks started off with a spot of green, but I'm looking across the board and you have all three oil marketing companies, major ones, that are trading in the red. And so the street has obviously taken the similar view that you've just described, and you've described it very aptly. So is that in the price, in your opinion?
So I think there's a couple of things to look at. One of the things that we have been stating for some time is that if you look at the last three crises that have happened in the last, let's say, 15 to 17 years, starting from the 2008 financial crisis and all the way up to even the current crisis right now, there is a certain, trough level valuation that OMCs tend to recover from. If you look at what valuation they are trading at today, our sense has been, and this is something we wrote in our note on the 20th of March as well, is that there's probably another 15% decline that one can see, post which, and of course, this is all based on the assumption that this conflict will get resolved one way or the other over the next couple of months. That being the case, from the bottom, which is maybe about 10-12% lower from the current levels, we have generally seen a 40% bounce back in all of these three names. Now, obviously, the challenge here is to predict the bottom at this point of time, because that entirely depends on how the dispute plays out. But this move by the government definitely helps alleviate some of the pain. But at a certain point of time, some price actions or further tax cuts are going to be required if prices remain at these levels. And I think that is something that will be a key monitorable to see if OMC fortunes sort of recover and the stocks recover from these levels.
Okay, so Prabal, when you say some more will be required, what's that quantum at the back of the envelope calculation telling you? How much more legroom that will be needed?
Right. So, every dollar increase in international prices, typically, if you have to keep margins at a constant level, is about a 50 paisa per liter change in the retail price, right? Given the fact that, 10 rupees of that has been taken care of, that means that about a $20 impact from the pre-conflict level has been taken care of. Now, if I look at what the prices were at that point of time, Brent was at about $73. Diesel was probably at about $90 odd.
Apologies, I'm going to have to...
That's the difference that you have to sort of look at.
Yes, you've made the point. Prabal, apology, I'm going to have to cut you off because we have to listen into what the interministerial press conference has to say, probably about what we were just speaking about oil. Let's listen in.
Now, following this crisis, there has been a significant surge in the international crude oil prices. इस क्राइसिस की वजह से जो अंतर्राष्ट्रीय क्रूड के प्राइसेस हैं उनमें स्वाभाविक रूप से काफ़ी बढ़ोतरी हुई है और उसके अलावा there has also been a higher surge in the prices of petrol, diesel and aviation turbine fuel. तो इससे हुआ क्या है कि this creates a market and it also creates an incentive for the refineries to be exporting at higher international prices. So the government's response on that has been a very calibrated response. And yesterday we came up with certain export duties in the form of special additional excise duty, SAED, and a road and infrastructure cess. Both these duties and cess have been imposed on the export of diesel and the aviation turbine fuel which has been imported from outside India. अगर मैं रेट की बात करूं तो डीजल पे 21.5% रुपए पर लीटर है और ATF पे 29.5 नहीं 29.5 रुपीस पर लीटर है. Now these duties on petrol and are nil at present. So the duties which have been imposed on diesel and ATF. The duties on petrol are nil based upon the present crack margins. However, the rates will be reviewed on a fortnightly basis. हर 15 दिन में सरकार एक mechanism लाएगी जिससे कि ये rates review हो. अब इस चेंजेस का फ़ायदा क्या होगा, इससे हम क्या हासिल करने वाले हैं. The idea behind having these changes is to prioritize the domestic availability of these products, that is diesel and ETF, and at the same time to ensure an energy security for the country in the midst of global uncertainty, which has been exacerbated by the disruption in the supply chain. And of course, the uncertainty prevailing in the international markets, both in terms of availability and price. Revenue gain at the back of the envelope calculation for these proposals would be roughly around 1,500 crores rupees in a fortnight. Situation, however, as I said earlier, will be monitored on a fortnightly basis. Now, there have been also, these were the changes on the export side. I will now come to the changes that have been made on the domestic side. Because as you would have read the Gazette notification yesterday, the changes are in two parts. One is an imposition of an export duty, and secondly, there have been changes in the excise duty on petrol and diesel for domestic consumption, where there has been a reduction by rupees 10 per litre by reducing the domestic special additional excise component of the current stack of levy that these products suffer when they are imported. So, in real terms, the revised duty on petrol comes now from rupees 21.90 rupees per litre to 11.90 rupees per litre. The revised duty on petrol में जो संशोधित ड्यूटी है वो पहले 21 रुपये 90 पैसे प्रति लीटर थी, and from 21.90 rupees per litre it will now come down to 11.90 rupees per litre, 11.90 रुपये per litre. एक रिडक्शन है 10 रुपये पर लीटर का. सिमिलरली डीजल पर द एग्जिस्टिंग ड्यूटी वाज 17.80 रुपये पर लीटर, which now will come down to 7.80 per litre. Now these above steps have been taken largely to reduce the under recoveries for the oil marketing companies, while at the same time ensuring that there is no increase in the prices of petrol and diesel for the consumers on account of the ongoing crisis. Revenue implications will be seen by the department. As I said earlier, on the side of the export, there was a revenue implication. We will be looking at the trends of imports for the fortnightly period and then coming up with what has been the revenue implication. Because please understand that the situation is dynamic. It is not business as usual where you would have a certain predictability कि इतना metric ton माल इतने period में आएगा. We are living in difficult times. You are all aware from the media about passages of ships and attendant problems. So any implication on that will of course have to factor in the actual supplies of goods coming into the country. And therefore, even within a limited time frame of fortnight, the department will have to also look at the supplies before you are able to come up with a very realistic implication as far as the revenue is concerned. So,
okay, so that was the CBIC chair talking about the impact when it comes to under recoveries as well, and then from there you're talking of what the impact will be on the exchequer, but the stocks have been slightly under pressure to the tune of 0.5% to almost 2%. It's only ONGC which is up in trade because of the benefits of crude coming in there. But very quickly, let's just pull up the rupee because that has been one of the conversation points. Amit Pabari, founder and managing director at Cara Forex, joins in. Amit, welcome to the show and a pleasure to speak to you. You know, my question is, I mean, this is becoming like a free fall where no one is really able to understand where is this going to stop. We're talking of levels of what, 90 4.79 in the morning, and from there on, the pressure has continued. You know, we've spoken to a couple of guests and they've been of the opinion that 96 in the near term is a no-brainer. People are also talking about 98 as well. What is the trajectory, one, that you will be watching out for, and two, what are the risks?
You know, looking at current scenario, the probability of rupee weakening is on a higher side than probability of rupee getting stronger against the dollar. The odds are against rupee. There are various factors like crude oil price under pressure. FIIs are continuously on the selling side. But in my last 20 years, I have observed that, you know, markets get bottom on a negative news and market get tops on a positive news. So probably, you know, we are, you know, psychologically, we are in the last leg of rupee getting weaker, and any positive news on de-escalation can make a swift move by 1.5 rupees on the appreciating side. So at current levels, my suggestion to all importers is that do not panic at 94.79 level to go and hedge your long-term imports. Rather wait for a correction towards 93.5 kind of level where they can think to participate on getting long on USD INR pair. But at current levels, avoid getting long on the dollar side.
Okay, so therefore from that perspective, I'd like to ask also, Amit, about what you see the Reserve Bank of India's response being, because it's obviously operating currently in the currency market, and this is happening notwithstanding that action. And so therefore, how do you see the central bank reacting?
So basically, if we see in last couple of years, they have been very clear with their stance that they are not going to protect any levels. They are only there to protect a volatility. Despite 13 billion rupee moving out of Indian equity market in 1.5 months, still, if we see the sharp depreciation what happened in 2008, 2013, rupee still manageable. Apart from that, I will say that Reserve Bank of India has strong control over the rupee in last couple of years. They have all instruments available. They have stronger reserves. So there will be no runaway in the rupee. What a lot of people are expecting, 98, 100. We are not expecting that kind of a level in near term. So from here, we are expecting that if the war gets de-escalated and the broader theme, that dollar, de-dollarization theme is there in the market, that will prevail. And from here, the odds, the probability is that we will see a sharp appreciation of 1.5 rupees to 2 rupees kind of a scenario.
Got it. Okay. All right. On that note, thanks so much for taking the time, and a pleasure speaking with you, Amit. Look forward to the next chapter.
Thank you.
We have to slip into a very quick break. We will continue to talk about the last few minutes of trade and maybe some trading strategies that you can employ heading into the end of the week and the start of next. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros.
Welcome back to India Market Close. You know, we're at the fag end of the show, and let's get Nilesh Jain as well as Neeraj Diwan. Welcome to the show, gentlemen. You know, Neeraj, let me come to you first. A quick view in terms of the Nifty semi-annual rejig that's happening, because of which you're seeing some moves come in on a Bharti Airtel, Tata Motors, CV, Cummins India, Union Bank and HDFC AMC. If you pull up the intraday charts, you'll see that mild spike that's coming in all of these names. Whereas the ones which are seeing an outflow is ICICI Bank, Lombard, Info Edge, HDFC Bank and Havells. Intraday charts of these counters will help you understand what I'm talking about in this last hour of trade. That spike that's coming in on a Bharti Airtel, what's happening to a Tata Motors, CV, HDF, AMC and Union Bank of India. A quick view on these counters, specifically with the ones which are seeing an inflow, Neeraj.
Yeah, good afternoon. Yes, you know, among the names that you mentioned, the ones which are seeing maximum order inflows, I think what is important would be that Tata Motors CV and Union Bank, these two have been doing well earlier also before this fall happened because of the war. I think these stocks generally look strong to me. I think these are, any dips in them are opportunities, and though today move in Bharti or some other, maybe because of the rejig, but you know, because of the market sentiment, you're not seeing that kind of a positive impact on the stock. But I think if someone is looking at medium to long term, I think these two really stand out among the lot. Bharti definitely is a portfolio stock, so everyone really must be holding it or likes to accumulate on all dips. But besides this, besides Bharti, Union Bank and Tata Motors CV look interesting too.
Right. Okay, let me go to Nilesh. Nilesh, we're winding down. It's been a pretty tough session, but we're seeing a little bit of a bounce from the low point. Is that something that can be bought into, or would you stay on the sidelines?
Very good afternoon, Alex. Good afternoon, Hiral, and good afternoon, everyone. So, looking at the overall setup, Alex, I think the Nifty has continued the formation of a low top and low bottom. And looking at the VIX right now, where we have seen another spike of close to 8%, and it is at elevated level near about 27, is a cause of concern. And I would advise to buy the dip as of now till time we get any clarity on any sort of a reversal kind of a setup for the market. As of now, all the factors are going against the trend, and we can expect further downtick to continue in the market. As far as Nifty is concerned, we expect a move towards 22,600 to 22,500 on the lower side. So the recent low of 22,500 is likely to be tested going forward once again in the coming week. So it's advised to stay on a sideline and wait for some bit of clarity in terms of a trend reversal. But yes, as of now, going with the trend, any pullback is likely to get sold into.
Okay. At the low point of the day for the Nifty 50, by the way, and so the bounce is for a few counters. Individual names, as we're heading into the last 8 minutes of trade, is there anything that you would buy for a short trade?
Well, Alex, a couple of stocks have witnessed a strong rebound. So first of all, Hindustan Copper, if you look at this particular stock, on the back of a surge in the copper prices, we have seen a small trend reversal. I won't say we can expect a V-shaped recovery, but yes, a small pullback move can be seen going forward, further upside towards 510 to 520. That cannot be ruled out. So keeping a stop loss below 480, any dip from here can be used as a buying opportunity in Hindustan Copper. And apart from that, another stock that's looking very strong, that's ONGC. We have also mentioned in the past as well that overall ONGC and Oil India, both the stocks have a very strong setup. And we expect a follow-up move to continue as far as ONGC is concerned on the upside towards 295 to 300. And one can keep a stop loss below 270, and buy and dip should be the strategy in the ONGC stock. One stock, particularly on the short side, we remain bearish on Realty pack as a whole. So Realty is a kind of a sell on rise setup. So any pullback, if you get in Lodha towards 705 to 710, that can be a good shorting opportunity for downside target of 690 to 680, and one can keep a stop loss above 721.
Okay, so that's with regards to Lodha. That also seeing a mild spike in trade as we speak. You know, two other names which are buzzing in trade, HEG and Graphite India, and this is because one of the US-based industry leaders, which is Graphitech, has increased graphite electrode prices globally, and that's what is providing some bit of a fillip to both these counters. Neeraj, any view on the graphite companies?
I think these companies normally see good demand toward the end of the year also. And with this price rise, I think there'll be further benefit. So I think though one should not be chasing them with the today up move, but I think one should be keeping in mind, once things are stabilizing, I think there can be good counters to buy for long term.
Nilesh, quick view on both these names on the charts.
We have seen a very good spike in today's trading session, but given the kind of a broader structure of HEG, where it is moving more sort of a range bound, not advisable to chase the momentum at current level. Better strategy would be if somebody wants to play on the long side, then wait for a dip towards 540, 530. That can be a good entry point. Then one can keep a stop loss below 500, and we are expecting a follow-up move to continue on the upside towards 620 to 640. If somebody is already bought into, then stay put is the advice, but avoid fresh entry in HEG, and similar is the case with Graphite as well. But in fact, comparatively, if I have to pick any one stock, I would go with Graphite. We have seen a fresh breakout coming in this particular counter today with a good volume activity, and we expect a follow-up move towards 680 to 700 on the upside. So one can keep a stop loss below 615 and can be added at current level and on declines.
The way that the Nifty Bank is capitulating in trade today, 2.7, nearly 3% down, Neeraj, it seems like it is almost a call that there will be monetary policy hikes down the road. And that's negative at this point, right? Would you say that this is an opportunity and that it's a little overdone, or would you not?
See, actually, the situation right now, the way it is panning, it is not good for the Indian economy. So the thing is that whether this continues for a longer time, the crude prices and the war, or it's going to stop in the next 1 week, 10 days. If it's going to stop in 1 week, 10 days, then maybe yes, it is overdone. But if it's going to continue for a longer time, it can have a medium to long-term impact on the economy. Then you can have a couple of quarters of slowdown, inflation going up, maybe interest rate going up not in the next meeting, maybe in the following meeting. So no, it is very difficult to say the bottom is there or not. I think one should keep a watch on how the situation is panning on the war front and on the crude prices, and then take a call. So they should not be in a hurry to get into a trade or get into an investment right now. But one should definitely have the shopping basket ready and wait for any cues from what is happening from the war front.
Okay, yeah, that's a fair point. Just a quick last question. So do you have your shopping basket ready, and what's on the top of the list for you?
So basically, I feel that energy companies which are into, renewable energy, or companies which have their backward integration, coal mines, I think those are kind of companies which should get a lot of demand going ahead. Then besides that, pharma, IT is one place where, I'm looking at opportunities, because I think once this thing is over, I think they can again start the uptrend. And IT, definitely, I'll have a look at the post result con calls, hear them, and then make a call on these companies. And specifically infrastructure, if you divide into certain water infrastructure or defense companies, these are where I think there are opportunities one can look at.
Interesting names. Thank you, Neeraj. Thank you, Nilesh, for joining in. Always a pleasure to speak to both of you as well. But clearly, we've ended nearly at the day's lowest levels, Alex, 22,804. Luckily, we've not broken that 22,800 mark.
Yeah, still a minute to go.
Yeah, still a minute to go. But I think 22,820 is where we are at. 22,804 was the intraday low, but nearly at the day's lows with cuts of 2% coming in there. Let's just pull up the Bank Nifty intraday chart as well, because
nearly
that's
3%.
where the pressure built in. There you go. I mean, a mild recovery from the day's lowest levels is what I would say, 50 points, but 2.7% downtick coming in there. I think components and contributors is going to be important.
Yeah, certainly. For the Nifty 50, right? Look at the contributors list, and you will see that Reliance Industries right there. It's the third biggest loser. State Bank of India, 4.2%. You will see HDFC Bank right here on the bottom list, 3% or thereabouts. A couple of others as well. Larsen & Toubro about 2.3%, HUL about 2.7%. These are all heavyweight companies. So if about 30-40% of your benchmark Nifty 50 is losing over 3% each, with Reliance Industries right at the bottom, close to 5%, it's bound to be a bad day.
And look at ONGC. If you just put up an intraday chart of ONGC, that will tell you that good recovery that's come in on that counter. It wasn't seeing gains of 400, almost at the day's highest levels. It's cooled off, but good gains coming in there. Bharti Airtel was another one. Tata Motors was another one which actually saw those inflows coming in on the back of the Nifty rejig, and we did see that spike. So that's the reason why I'm pulling, but it's cooled off as well, right? So interesting moves that we've seen in terms of where the markets go. And if you look at the broader markets as well very quickly, I think Alex will be able to take us through what's happening there.
Yeah, certainly. In fact, let's look at the mid-cap index once we close, and we're just 2 seconds away. The mid-cap index closing with cuts of about 2.2%, just a bit off the low point of the day, but sharp gashes on the screen. Similar cuts for the small-cap index as well. Pull that up, and we'll look at that 2.1% or thereabouts. So we've lost a considerable amount of ground. I think what Samit Vartak was saying this morning is actually very interesting, right? And we'll talk about some bits of that when we start Editor's Cut next as well, which is that at the benchmark level, if we've fallen for the small cap index over 18% or thereabouts from the peak, there are a lot of companies, smaller companies beyond that first 100, 200, even in the small cap space, that have corrected even more, and so valuations might actually be too attractive right now.
Yeah, valuations may be attractive, and that peak to trough is what we need to see from here on. But clearly, this is the way we are ending in terms of the markets. After those 2 good days, we've seen that weakness which has come in yet again. How next week will be is anyone's guess, because volumes, everyone is anticipating to be low, Alex, because of a truncated week next week.
Absolutely. And that brings us to the end of this edition of India Market Close. Stay tuned. Up next is the Editor's Cut.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
Hi, thanks so much for joining in. You're watching Editor's Cut on NDTV Profit. My name is Alex Matthew and with me is Realty. And this is where we capture some of the biggest talking points of the week. And in fact, let's also welcome in the third editor, the guest editor. And we're joined today by Mr. Sanjay Parekh of Soham joining us right now. Sanjay, thanks so much for taking the time and welcome on board to this edition of Editor's Cut. It's going to be, I think, an interesting conversation because there's just so much to talk about. Before both of us get started, though, I want to throw it to you. If you look back at the week gone by, and I'm going to throw geopolitics in as well because that's something that everyone's got an opinion on. What stood out to you?
Yeah, no, good afternoon. It's pretty interesting times, quite volatile, a lot of news flow. I mean, busy season for all of you with a lot of action. I think, you see, we certainly exactly don't know when this will end, but initial signs are that we are nearing the end. Now, obviously, we all know that there are signals from US to end the war with amicable solution, and most likely Israel will fall in place. But now Iran needs certainly their share. They certainly need some compensation and all. Maybe some guarantees. So it's a work in progress. It's difficult to predict. But the pressure, at least on the economic side, is so high, and the disruptions are so high that all the stakeholders world over will try to resolve it. And at least history suggests that these are not issues which are, if the inclination is there will be a solution. Today, it's not clear. But at least we believe that we are towards the resolution soon. Whether it's 10 days, 15 days, it's difficult to predict.
In the interim, there's quite a bit of disruption that has to be.
Yeah, I mean, there's a lot of disruption, and what I would want to add over here is from where this entire escalation has started, according to me, the reasons for the escalation were very different. And now, what everyone is talking about is who will actually own the Strait of Hormuz, okay? and who will actually be allowed to get the rights of the Strait of Hormuz, which was never the question in the past, before the entire war scenario started. So now that's become the talking point. And the question is, how many more weeks of pain? Because it's trickling down to a lot of sectors, Alex and Sanjay, if I may put it through, where I don't think so any direct or indirect sector is spared. You talk about a textile manufacturer, you talk about someone who's in the diamond industry, you talk about anyone, you know, from a common man to someone in any of the industries is seeing some bit of an impact.
I think that is a strategy that is currently being employed. And we spoke with a geopolitical expert just a short while back, and he put it well. It's a war of attrition that is currently being fought by Iran, and ultimately it is holding the Strait of Hormuz hostage, and as a result of which the entire world practically is clamoring for an end to a conflict that nobody really wanted. So you have a situation where both domestically for Donald Trump, even though he's putting a brave face of it, and he's always done that, he's facing incredible pressure from his electorate and from the Republican Party, though they have stood behind him all this while, and significant political pressure on the opposite side as well. They're heading into midterm elections, so it's a fraught time politically for him.
Correct.
He's actually lost quite a bit in the way of approval ratings, whereas in the past, several presidents have gained after wars. That is the opposite of what has happened right now. So all Iran has to do at this stage is to hold strong and to prevent a decision being made immediately. And the longer this conflict goes on, the more chances they have of getting what they want.
You know, that's what we're talking about exactly when a geopolitical perspective goes. Now, don't you think that the situation is very similar when it comes to the India context as well, Sanjay? Because here we're talking about what the government has done today. We're in an oil dilemma for them. One, they've gone ahead and cut the excise duty when it comes to petrol and diesel. And clearly, when you're talking about the cut that has happened so far as well, it's going to clearly benefit the oil marketing companies to some extent, not 100%, but the kind of impact that the exchequer is going to take, that is the key question, because your fisc gets impacted from one point. And on the other hand, you know, Alex was making a point as well some time ago that if the government did not do it in this fashion, the other impact would come in terms of inflation, or it would probably come in and then trickle down to the government's borrowing program. You know, how are you looking at this entire angle?
No, you got it right. No, there's a delicate balance there to, there is a gap. I mean, at 5 million barrels per day into average, let's say if it's 40 rupees or 30 rupees, $150 million a day is a gap. Now, it has to be filled up either by the oil companies or the government. And currently, they are not passing it on to the retail. And, you know, we have elections ahead, so clearly they would not want to do that. So today, the exchequer has taken the brunt because the damage in terms of negative margins were so high that it would have led the O&M companies in a very bad shape. So now this entire thing, the blow to the marketing companies gets lower by this. That's the first thing that they have done. And to that extent, of course, the fiscal deficit goes up. Obviously, this is not going to last whole year. So it is dynamic, and you can't extrapolate this to the whole year on an annualized basis. So to some extent, for some time, the fisc has taken the burden, and hence the 10-year has gone up. Now, obviously, this has cascading effect on fisc, the interest rates, and hence risk premiums also have gone up, and also the rupee is there's a pressure on rupee. So it is vicious right now. But I think we still, it's if you compare to a lot of other countries, some of the smaller countries, they badly got affected. I think we're still in control. But we certainly need a solution very soon.
Yeah, this is exactly the point that I was making, Sanjay. And I'm so glad that you've said it without us having discussed it as well. Just to put all of this into perspective, right? What was announced today? You've had a 10 rupee cut in the duty on both diesel and petrol. The move essentially staunches the losses for the oil marketing companies. And there have been various estimates as to how much the losses were. Nomura, for example, estimating at close to 49 rupees per litre. And this mitigates that to the extent of 20%. So it's a bandage on an open wound at this stage, but it's at least there is a bandage. The trade-off, and let's talk about the trade-off, because that's exactly what Sanjay was talking about. On the one hand, if you annualize the losses to the exchequer, it comes to about 1.7 lakh crore rupees. But on the other hand, you look at the new CPI basket that has come through, the weightage for oil and oil sensitives has actually gone up. And so if you look at the estimate for FY26, that's the current financial year, CPI estimated 2.1%, and you head into next year and is expected to go up towards that 4% mark, which, remember, is the tolerance level for the Reserve Bank of India, which is an inflation targeting central bank. So the minute you allow fuel prices at the pump to go up, that will translate into inflation going up. And the minute you go past that 5%, 5.5%, 6% mark, the RBI is going to have to be forced to come in and increase interest rates, which is a problem for the fisc as well, because borrowing costs for the government go up, and not just the government, also the state government. Remember, the finances of the state governments are not as strong as the central government, and the borrowing programs have been problematic.
So the question I have, Alex, over here is, now that the government has chosen a different route, right? They have not really let the inflation side of it get impacted. What happens at the RBI monetary policy, which is just slated 8 or 10 days from now, right? Does this give them enough room to not really do anything and stay status quo? Or, I mean, with this kind of a scenario, so everyone was expecting that probably they will have to move out of their comfort zone and take a hike. What happens then is the question.
I think that's going to be a critical question to ask, whether or not the projections for both inflation and growth change. Because remember, the last time around when the monetary policy review happened by the Monetary Policy Committee, there was a change both in the series for GDP as well as for inflation. And so none of the estimates for the full year for FY27 were changed. They were cautious on that regard. And so much has happened between the last monetary policy and the next one, which is just a couple of weeks or
I think 4th and 6th
of April. So it's just a few days away. And so therefore there's a lot to unpack. But I think more than anything else, it's going to be the rupee that has to be spoken about, because even today at the close, we were at 94.8. And Sanjay, I wonder if you ever contemplated over the course of the last 6 months or so, whether you had contemplated 94.8 and close to 95 for the rupee, and what you think the implications of that are. Because for importers, and particularly for companies that are buying crude as well, for gold, for various other assets that come into play, we're going to ultimately be paying the price for all of that.
So, very relevant point. But Alex, if you permit me, I'll cover the RBI. You know, you did mention about RBI's actions, and I really believe that, you know, they will give some space, you know, they will not, and it is 4 plus or minus 2%, and we can even overshoot on the upside. But I really believe that our RBI governor and the whole team is very progressive, and they do understand that these are cyclical shocks and not secular issues. And they do differentiate between them. So say they may see through it for a while, not very long. And if the inflation is sticky and longer, they certainly will move towards raising rates or you know, any actions towards that. But I think it will be too early for them to do anything in the current policy. That's what I think. On the currency, what you said is, you know, we have the whole math is known. You know, the gap that we need to fill up is through the crude going up, crude shooting up, and it does have an impact. It does have an issue on the overall reserves, and hence, you know, RBI also at a point would not be aggressive, knowing the trend to support rupee. And that is what I think is happening, and it's allowing the natural way where it settles. And that's the right thing to do. Instead of unnecessarily trying to support Rupee and use all the reserves, let the market takes its own stand, and if it gets excessive, they may intervene.
Alex, I'm going to come in. No, I'm going to come in.
Just one line. It's like throwing. It's like using a bucket to throw water at a forest fire, right, Sanjay? So there's no point after.
Yeah,
after
you know what? From what Sanjay is saying as well, I want to take this segue into what's happening in the equity markets, right? And one sector which actually becomes a beneficiary over here is IT. Now, again, a lot of conversations happening with regards to IT where people have been of the opinion that AI is going to come in as a disruption, and hence people are not really seeing that kind of value in IT. But when you talk about valuations, they are way cheaper right now. So when you're talking about IT as a sector, Rupee, yes, a tailwind with where it is. AI may be a tailwind, may not be a tailwind for some. That's the question. I'm sure Alex will have his inputs here as well. But Sanjay, anything that you would want to look at if you have to take a segue from the Rupee to IT as a sector? And you have a couple of, CIOs, fund managers who are talking about pharma as the new IT.
So, at least we don't want to maneuver or change just for an event which we don't know how long it will last. So that's our stand. We will do a little bit of pivot, but no major changes that we want to do in our portfolio, assuming that this is going to last for the next 12 months. Because let's say you go overweight on a particular sector at a point, and let's say IT in this case, where clearly there are headwinds of AI. And even the overall decision-making process can slow down because of this uncertainty. And then you have a tailwind of one-off, Rupee depreciation-led advantage, which obviously the clients are not going to allow you to keep it for very long. So with that, at least we don't think, outlook changes. If at all, yes, there could be a pop for maybe 5-10%, or in relative terms, it does well. Which is good at a point, but I don't think there's a secular change that we are seeing there. So that's there. On the pharma, yes, it is less affected, selectively, but the supply chain disruption can happen there as well. The shipping rates have gone up, the procurement of raw material. We will get to know a little later for the fourth quarter what are the bottlenecks. And then, of course, yesterday in the Trump statements, he did talk about drug prices coming down and he doing more of it. So you don't know, right? Someday even they'll clamp on those things as well as the midterms come. So it is volatile. And as I said, that's why what we are doing is not changing strategy significantly from our original stand of domestic overweight, global underweight. And it has worked well for us, and we will continue with that.
Okay, all right. I just want to make a point, and Sanjay, Hiral, please weigh in on this. And this is a piece that I got through from a private equity firm, Thoma Bravo. This is from a report that they did, and they're talking about artificial intelligence, and they're saying with regard to software, the disruption is not uniform across the board. And the point that they're making is, and there's a very nice graphic that they've used to represent this, is that those that have generalist knowledge, that are simple or low stakes workflow, that have higher tolerance for mistakes, low cost of failure, are more likely to be disrupted. On the other end, you have deep and specialized domain expertise, you have complex and critical workflow, you have embedded platforms and high cost of failure, as well as stringent regulation and compliance requirements. These are places where it's less likely to be disrupted. And just going to the conversations that we've had with some of the smaller software companies in the recent past, they're already seeing changes in the way that they're conducting their contracts and executing the business that they're doing, in that they have lesser number of people working per project, so they're able to take more projects on. That's possibly going to lead to a higher top line growth, and they're being more productive. So they're getting better margins on certain, or better bang for the buck, so to speak, for the money that they're paying per project. Sanjay, am I looking at this and making it, obviously it's a little simplistic to look at this that way, but is this something that could maybe surprise a few people to say that the survivors of this transition will actually be significantly better off if they transition now?
Yeah, no, you're absolutely right. So, I think there are headwinds and tailwinds of AI. Clearly, the number of software professionals you need is significantly less. You can have more of automation. You can definitely use AI intensely, and some of these larger companies like Infosys already have been using Cobalt and have already all the platforms in place. But at the same time, there will be a need. I mean, AI will definitely cannibalize revenues, and some of them are quantified as well that it could be 2% impact per annum for the next few years. So the point is that if they were to normally grow at 6-7%, because of AI, if the revenue growth were to be less, let's say 3-4%, then that's what market has done, from taking them from 22 times 1 year forward to now 15-16 times 1 year forward. So we believe the downside may be limited, but there is value in it. But whether we're going to have a secular run up is, I think, where each of the companies, as you mentioned, some of them will adapt it very well and come out to be winners, and some of them will really badly get affected who don't adapt to the new environment.
This is something that we'll have to figure out in terms of what happens when you talk about the AI play. But the other thing is the kind of downgrades that have come in, Alex, in the course of time, from a Goldman Sachs to, if I'm not mistaken, HSBC, multiple brokerages have gone ahead.
There was one more.
Multiple of them, Nomura, all of them have cut UBS. Their target in terms of Nifty 50 in that range of 5 to 15%. Now, with this target cut on Nifty 50 and the opportunities that could come in, my question is it that earnings will be downgraded from here on? Maybe not in the near term, but from a longer term perspective, there will be earnings downgrade that comes in, because if that is going to happen, that's when you will see it reflect on what your expectation for Nifty 50 is. And two, the safe haven play again becomes your large caps, which is your Nifty 50 company, versus your broader markets. I don't know from where are people really going to find opportunities. Is it going to be the broader markets, or is it going to be the large cap space, because that's going to be a better safe haven within the equity spectrum, comparing it to your broader markets?
So it's a fair question. I personally am of the opinion that you should be utilizing this time to build for the long term. It's a period of significant disruption, and you're getting a lot of good companies at a very attractive price.
Let's get Sanjay to weigh in. Sanjay, your thoughts?
In fact, I totally get that. So we have the same strategy. Our portfolio positioning is at least always 70% will be large cap. We've increased our large cap from 73-74% to now 79%. And some of the bottom-up opportunities are phenomenal. So we are telling our clients, we are ourselves investing gradually, because these are the times when we genuinely believe that slowly and steadily you need to invest into, in our case, in our own funds, and then look for, within the fund, look for opportunities where there's amazing opportunities in large caps. So it could be financials, it could be telecom, it could be even the largest conglomerate. You're getting really things at very reasonable valuation within Nifty. And then we, of course, know the risk that we are taking of this prolonged. If it gets prolonged, there is some risk. So what we are telling our clients is slowly and steadily build your positions. Don't use all your ammunition at one go. But this is the time to invest. Because we genuinely believe this is not going to last beyond maybe maximum the next 1 month. And because we need to have a framework, and that's the framework we have, that there will be a solution within a month or maybe earlier, and then we'll go back to normal. And then earnings disruption in that case will not be too large. And even if we take some lower earnings, assuming 27, 28 will get normal, next year earnings for Nifty was before the war was 1270. Let's say even if you go to 1220, 1220, 1230, and next year we end at 1400 and things get stabilized, then we still see a good upside. And this is then the opportunity to, in hindsight, it will look like a very big missed opportunity.
Yeah. As they say, the wisdom of retrospect is flawless. Sanjay, on that note, thank you so much for taking the time. Pleasure having you. And I think that brings us to the end of this edition of the Editor's Cut. It's been an absolute pleasure. On behalf of Hiral, myself, and the team that put this show together, thank you so much for watching. And do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
बातों बातों में एक बात कही कि मैं 100 साल तक यहीं रहने वाला। क्या कोई दवाई बना ली है? हमने सेल एंड ट्रायल करके देख लिया।
हम माने बाबा 150 साल जिएंगे। एक और रेसलर है जो आपको कहता है मिलावट खोरों के सम्राट। हाँ। मैं ब्रजभूषण शरण सिंह की बात कर रहा हूँ।
इस प्रश्न को डिलीट कर दीजिए।
आप उन पर बोलना नहीं चाहते?
नो कमेंट।
सुप्रीम कोर्ट ने आपके विज्ञापनों को भ्रामक बताया, आपने माफी मांगी।
झूठी बात, कोई माफी नहीं मांगी, मैं बैठा हूँ ना यहाँ पर। तुम्हारे प्रश्न बड़े खतरनाक हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called
Market ends lower for fifth consecutive week with Nifty and Sensex ending over 1% in the red. Broader indices also underperform, all sectors barring IT close finish in the red. Rupee closes at 94 rupees 82 paise against the dollar after breaching the 94 rupees mark earlier in the day and also hitting record lows of 94.85 against dollar. Government cuts excise duty on petrol for OMCs from 13 rupees to 3 rupees per litre. Duty on diesel reduced to nil. Also levies 50 rupees per litre excise duty on aviation turbine fuel. Prime Minister Modi will hold a virtual meeting with chief ministers to review their preparedness and plans in light of the West Asia conflict. US administration proposes a new reform to boost the standard wage benchmarks for H-1B and other visa workers in America, focusing on the prevailing wage, which is the minimum salary employers are legally required to offer foreign workers. Dr. Reddy's agrees to rename its semaglutide drug from Olympic to Olimra. Novo Nordisk is the one which had filed a case, accepts the new name. Hello and welcome. You have joined us on Profit 360. I'm Nisha Podar. Let's take you through the top story that we are tracking today. Well, markets see a sharp selling pressure today, with benchmarks really snapping their two-day winning streak. Nifty ending over 2% lower, and Sensex fell as much as 2.2% to 73,621 mark. Now, the broader markets, they mirrored the weakness as well. Let's take it across to my colleague Jasmeet, who has a detailed report on the market action in the week gone by. Jasmeet.
Nifty ends in red in today's trade. It snaps its two-day of gaining streak. If you look at the weekly picture, Nifty ends in red this week, down about 1%, while Nifty closes in red for the fifth consecutive week in a row, showing the extended pressure in it. While further, BEL and Trend are the top losers of Nifty in this particular week, down about 5%. The broader market ends in red as well, reflecting the Nifty 50. While in terms of Nifty Midcap 150, they are down about 1.5%. And top losers in Midcap 150, we have stocks like IDBI Bank and Gujarat Gas, both the top losers in Nifty Midcap 150, down about 11% in today's trade, while Nifty Midcap 150 closes in red for the fifth consecutive week in the row. Now, in terms of small cap 250, even that ends in red, closes almost 1% lower in this particular week, while First Cry and Chennai Petro are the top lowers in Nifty small cap 250, both down over 10%. All sectors see the extended pressure and end in red in this week, while the Nifty IT was the only sector in green. In terms of Nifty India Defence, it becomes the most losing sector, closes 4% down. While Nifty India Defence ends in red for the third week in a row, while GRSE and BDL loses the most in Nifty India Defence this week. While in terms of the overall performance of these two stocks, they were down about 9%. While in terms of Nifty IT, it becomes the only gaining sector in this week, while Nifty IT gains for the second week in a row and gains about 1% in the particular week. Now, in terms of the top gainers, we have Coforge and Oracle Financial Services in Nifty IT, both up about 5%. While lowest weekly close of Nifty FMCG since April 2026 was marked in this week, while lowest Nifty closing for Nifty Realty since November 2023. All in all, we do see pressure in the market amid the global uncertainties.
All right, Jasmeet, thanks so much for that roundup of the market action. Let's also get an expert opinion coming in on the market. Samir Vartak of Sage One says that India's macro story remains resilient, with deleveraged corporates really offering a key cushion. Let's listen in.
I think right now what the actions the government probably is taking, these are all short-term, maybe just trying to heal the small wounds. I think the longer term, it's more of taking away the pain from the oil marketing companies and having that transferred to the consumer, to its own balance sheet, right? But someone has to pay for it. So it will definitely impact the fiscal, the trade deficit, and will have some impact on the currency. These kind of events, do create short-term opportunities. As an investor, my job is to find bottom-up opportunity. One of the biggest advantages that India has right now is that almost the entire corporate world is deleveraged. We are not facing at a corporate level any kind of a stress on the balance sheet. Government probably would ease, maybe foreign capital coming in.
All right, so that was the word coming in on the markets. But remember, more than the equities market, the bigger worry has really come in from the money market today, with Rupee, which really closed at 94 rupees 82 paise against the dollar.
after falling to a record low today of a worrying level. Remember, very close to 95. So 94.85 is the lowest record low that Rupee has hit today. Rupee has breached the 94 mark for the first time. And persistent global volatility is one factor, elevated crude price is another, and also continued foreign fund outflows are keeping the pressure on the currency, with the energy shock from the ongoing Middle East tensions really adding to the downside risk. So Rupee coming very close to the 95 to a dollar mark, which is a worrying number, remember. Now let's focus on the one factor which is really playing truant when it comes to our equity as well as the money market. We're talking about crude, and the crude prices, they remain elevated, with Brent holding above the $109 to $10 per barrel zone, while the WTI crude is hovering in the 95 to 97 per barrel range. Now, keeping oil firmly elevated amidst the ongoing geopolitical tension is a big worry, and markets are really factoring in the potential disruptions around key oil routes, keeping sentiment volatile and also the prices supported. So that's a big worry and a factor really coming in. But rising crude volatility really continues to keep pressure on oil marketing companies in India, with concerns around input costs and margins still in the play. Here's ICICI Securities' Prabal Sen with his assessment of this particular factor.
It is important to remember that the Indian basket of crude has a substantial weightage for Dubai and Oman crude, which is not really the price that is being paid, because those crudes are not the ones that are being purchased right now. Dubai and Oman, till about yesterday, were trading at a $50 premium in the physical market to Brent, if one has to rely on published numbers. And therefore, it sort of probably increases the under recovery number slightly more than what it should be. Incidence of these retail margins is obviously reduced to quite a extent, but it still remains fairly significant. So as of now, with GRMs being what they are and with retail margins being what they are, I still think that OMCs are not really out of trouble.
And amid the Middle East war, well, the government has today revised its fuel duty structure. Government has cut the special additional excise duty on petrol to Rupee 3 per litre, and also scrapped it entirely on diesel for the oil marketing companies. Now, the Petroleum Minister Hardeep Singh Puri said that the government chose to absorb the fiscal hit to protect the consumers and also reduce the losses faced by oil marketing companies. In fact, the Finance Minister, Nirmala Sitharaman, has said that the move aims to ensure uninterrupted fuel supply in the country. Listen in to what she had to say on the excise duty cut.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है, उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें, और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं, और हमारे जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में, अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
All right, constant assurances really coming in from government that there is enough supply of fuel in the country. Now, and in an inter-ministerial briefing today, and that's also we are tracking daily, the government highlighted the reduced special additional excise duty on petrol and diesel to really bring relief to the oil companies. In fact, government says that the revenue gain would be around 1,500 crore rupees in a fortnight, 7,000 loss in fortnight. Listen in.
The
revised duty on petrol comes now from rupees 21.90 rupees per liter to 11.90 rupees per liter. Similarly, diesel per, the existing duty was 17.80, 17.80 rupee per liter, which now will come down to 7.80 per liter. Now, these above steps have been taken largely to reduce the under-recoveries for the oil marketing companies, while at the same time ensuring that there is no increase in the prices of petrol and diesel for the consumers on account of the ongoing crisis. Revenue implications will be seen by the department. As I said earlier, on the side of the export, there was a revenue implication. We will be looking at the trends of imports for the fortnightly period and then coming up with what has been the revenue implication.
All right, this particular move by the government is expected to ease the financial pressure on the OMCs or oil marketing companies. My colleague Ritu spoke to citizens in Bengaluru about government's decision to really cut the excise duty on fuel. Take a look at this particular report.
Amid the tensions that are escalating in the Middle East, there was quite a fear in India as well about the petrol and the diesel prices going high as well. But of course, as a relief that the central government has cut off the excise duty for the petrol by 3 and for the diesel as in nil to ensure this, of course, is for the OMCs. But this is also somewhere is seen as a relief for the consumers as well, for the common man as well. We are right now in one of the petrol bunks here in Bengaluru where the customers are all queuing up as well. We'll try and have a word with them as well. Sir, the petrol, you see the excise duty for the petrol or for that matter the diesel has been cut off by the central government on the OMCs to ensure that it does not further burden the common man. How do you see this as a relief, sir, at this point in time?
Actually too problem for us, but it's okay now. We are getting now, but after few days it will not.
So you're somewhere happy about you will not have to give more amount going forward for the petrol or the diesel, you mean?
Yeah.
All right. So of course you see the consumers here in Bengaluru as well are quite happy about the fact that how that the prices have got reduced as well. We'll try and speak to the other customers as well. Sir, OMCs के लिए एक्साइज ड्यूटी कट ऑफ किया गया है पेट्रोल और डीजल के लिए ताकि आम जनता को ज्यादा भार ना हो इसके लिए, तो आपको किस तरीके से रिलीफ दिख रहा है, क्योंकि आप स्विगी के लिए रात और दिन तो काम करते ही है?
नहीं, हमने तो पेट्रोल तो मिल रहा है इधर पे बेंगलोर में, तो
पर वो दाम जो है ज्यादा अभी नहीं बढ़ेंगे क्योंकि ओएमसीज के लिए उन्होंने एक रिलीफ लाया है सेंट्रल गवर्नमेंट। तो आपको किस तरीके से लगता है कि ये ज्यादा इंपॉर्टेंट भी था, क्योंकि हमें फिर ज्यादा नहीं देना पड़ेगा, सेविंग थोड़ी एटलीस्ट बचेगी?
वो तो क्या भी नहीं, परवाह नहीं, चल रहा है अभी तो।
All right, you see the customers of course here in Bengaluru also are quite happy in a way that and are welcoming this move of the central government as well, that this is further not going to burden the common man, the customers as well with what that the central government has decided for the OMCs.
All right, so the big story that we are really discussing today is the government really reducing the additional excise duty on both petrol as well as diesel, which not just impacts the oil marketing companies, but even the citizens of the country, because it gets passed on. And the escalation in the crude oil prices, the fuel prices going up because of the Middle Eastern war, do not impact the citizens of the country and the oil marketing companies as well. So therefore, the internals are that petrol to rupee 3 per litre, and it completely being scrapped for diesel. Shrimi, my colleague, is joining in with more details on that. Shrimi, how does it really impact on the ground and the OMCs?
Yeah, that's right, Nisha. Actually, two aspects. One, we are talking about reducing the excise duty on petrol, on diesel. And just to revise that number, what we just heard from the press briefing is that diesel from 17.8 litre to 7.8 rupees per litre. That's the revision, which is 10% cut. Then, the 10 rupees cut. And then 21 per litre to 11 per litre is on petrol. That's the reduction we are talking about. The second point, and that's again very crucial, is increasing the export duty on diesel as well as your air turbine fuel, that is ATF. Now, two of these components has revenue implication. One, of course, when you reduce the duty, government will have to bear that brunt, and that is coming as per the initial assessment, and that's what CBIC chairman hinted, that 7,000 crore fortnightly is the initial assessment they are talking about after 10 rupees each cut on the account of petrol and diesel. Now, the other aspect, which is increasing the export duty on ATF as well as diesel, 20 rupees and 29 rupees each, that is coming to the gain of 1,500 rupees fortnightly. Now, this is very interesting, Nisha, because this will take the entire revenue impact on the government kitty is closer to 5,500 rupees. Now, that is something nobody is clearly explicitly saying, but on both account, if you see, that's coming to that number that in fortnight, in 15 days, government had to bear 5,500, and of course, they are going to review every 15 days on that. And the third important clarity which comes from the CBDT chair, from comparing these from the windfall taxes. Now, windfall taxes, when it was implemented in 2022, it has the crude aspect in that. They were revising the numbers every fortnightly basis on the crude crude price basis. But in this special duty on export duty on both ATF and diesel, there is no participation from the crude side, meaning they are not taking crude prices under consideration. And that's equally important, this clarity equally important, because they're not saying that this is a windfall tax. They're just saying that we are reviewing the situation and we want to ensure adequate supply, domestic ATF supply, and that's the reason of this differentiation pricing between domestic ATF and the ATF which we are exporting outside India.
All right, Shrimi, very, very important points there you made. And the biggest point is that the excise cut, which is in the interest of the consumers and the oil marketing companies, but that is the thing that is absorbed by the government in terms of letting go of their revenue. So that's where the excise cut has really come in, and that's the maths that Shrimi, my colleague, was trying to really explain here. So that's an important point to really keep in mind. Meanwhile, also remember that the government has offered a relief to the consumers by boosting the commercial LPG availability. Government has increased the commercial LPG allocation to states to 70%, which is at pre-crisis levels. Now, the Petroleum and Natural Gas Secretary has written to all the states directing them to ensure smooth distribution as well as support uninterrupted supply to the priority industries. In fact, my colleague Danish shares more details on this particular development. Tell us, Danish.
With the Secretary of Ministry of Petroleum and Natural Gas, Dr. Neeraj Mittal has written a letter to states in which he has stated that the central government will be allocating 20% more commercial LPG to the states, bringing the allotment of commercial LPG to 70%, which is similar to the pre-crisis levels. In this 20%, the central government has proposed to the states that you will be getting 10% more commercial LPG with certain terms and conditions, and by that I mean the central government wants the state governments to promote PNG connections, and they clearly stated that if you're able to do that, the overall allocation will now stand at 70%. Over the past few weeks, we saw that the government had cut commercial LPG allocation because the domestic consumers were the central government's priority. But now, over the past few weeks, as more and more LPG shipments are being secured, so on the domestic front, the entire LPG situation is more or less on the bright side, and it is improving slowly. But the commercial LPG is still a major cause of concern, and hence now the government has proposed that they will be allocating 20% more commercial LPG, and the extra 20% LPG that the central government will be providing to the states, it will be especially for major labor intensive sectors such as factories for automobile and other industries. So all in all, if we see the central government has clearly indicated that they will be now allocating 70% commercial LPG to all the states.
All right, Danish, that's a big move coming in, especially the commercial usage of LPG. Now, restaurants across India are really increasing, switching to coal as an alternative fuel due to the ongoing shortage of commercial LPG cylinders triggered by the Middle East conflict. That's the real word coming in from our ground reports. Coal distributors report that prices have risen by over 50% in the last 15 days. In fact, my colleague Ridhima brings us the ground report on how the restaurants as well as the coal suppliers are grappling with this new reality. Take a look.
Restaurants in Mumbai have started using coal as an alternative fuel to LPG due to its shortage. We are here at Gulshan Restaurant in Kalina, where the owner told us that there has been no other choice but to use coal as an alternative fuel.
अभी तो हम लोग को या तो बंद करना पड़ेगा या तो कोयला यूज करना पड़ेगा क्योंकि सिलेंडर जरा भी नहीं आ रहा हम लोग के पास.
Restaurants have no other option but to use coal for their operations due to the shortage of LPG. This rise in coal demand has led to the increase in prices of coal by over 50%.
पहले 15 डेज पहले जो है 40 रुपीज 35 रुपीज मिलता था. अभी जो हाल फिलहाल चल रहा है 70 रुपीज 60 रुपीज और 50 रुपीज. ये 3 डेट का चल रहा है. डिमांड तो बहुत बढ़ रहा है कि हम लोग माल भी नहीं दे पा रहे. बहुत सारे ऑर्डर्स मिस कर दे रहे. बहुत डिमांड बढ़ रहे हैं. लेकिन अभी कैसा अगर आने वाले 10-15 दिन या 20 दिन और रहेगा तो कोयले का शॉर्टेज हो सकता है.
Government in the past had discouraged the use of coal due to environment reasons, but for now it has relaxed these rules. Despite these relaxations by government, restaurants have already started to face a shortage in supply of coal.
अभी लिमिटेड हो गया है. पहले ना मिल जाता था. अभी तो 10 किलो से ज़्यादा कोयला कोई देता भी नहीं. तो 10 किलो में कुछ काम नहीं होने वाला हमारा.
For now, the government has relaxed the rules on the usage of coal because there is no other option. But distributors fear that there could be shortage of coal due to the rise in demand, and the prices could even see a hike in the coming time. This is Ridhima with camera person Vijay Sartape for NDTV Profit.
All right, so that's one impact of the war situation, energy crisis, and that's the ground report coming in. With that, it's a wrap on Profit 360, but do keep it with NDTV Profit. Thank you so much for tuning in.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
जो अपने बच्चों को गुरुकुल में नहीं पढ़ाते वो अंग्रेजों और मुगलों की औलाद है।
भारतीय शिक्षा बोर्ड से जो बच्चा पढ़ लेगा आतंकवादी नहीं होगा, नशेड़ी गंजेड़ी भंगेड़ी नहीं होगा, बेरोजगार नहीं होगा। सभी नेता आपको सुन रहे हैं।
30 नेताओं के बच्चे विदेश में पढ़ रहे हैं
और बहुत से पापा के मित्र भी हैं। तेरे पेट में क्यों दर्द हो रहा है?
क्या बाहरियों से ज्यादा चुनौती योगी आदित्यनाथ के लिए घर के भीतर? आसान सवाल है।
आसान तो सवाल कुछ भी नहीं है। हल्दी अदरक एक साथ खा के बैठे हो। थोड़ा हंसा करो तुम लोग, क्या कुछ ज्यादा गंभीर होकर के आ गए।
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock.
Hello and welcome back to NDTV Profit. You're watching KYC, that's Know Your Company, and today I'm not going to let you go through the hoops of guessing the company because it's a very interesting one in Veranda Learning. Now, the EdTech space has been very, very active. You've seen on the private side, upgrade, acquiring an academy, and the things start to look a very bit interesting for Veranda at this point of time, given that they've done a QIP just about 9 to 10 months ago, as well as the demerger that's expected very soon, and we'll get to that in just a bit. But an integrated online to offline EdTech company, meaning that they made an acquisition of JK Shah Classes, which give them access to a lot more on the offline side of things. Now, of course, they serve the learners preparing for competitive as well as professional examination, something that's not new to India at this point of time, but a very lucrative opportunity for all those that are present in this space. Now, they operate across some key examinations of the government, CA, higher education, as well as the vocational segment, which is a very interesting one. Also, given the current context, what's happening with IT amongst others, they also largely continue to acquire 14 companies in the last 2 to 3 financial years, and hence building their scale across key verticals. Now, the revenue model for the company is very interesting because, of course, a fee-based admission as well as course enrollment program. The course enrollment also, of course, needs a little bit of marketing expenses, and we'll question that to the management. But when you move on and look at the other key aspects, which is, of course, the hybrid model that the company continues to operate in. When you also see that, the company's FY25 revenue grew by almost 30% to 470 crores, has been a decent growth, but profitability has taken a hit, and we'll get to that in just a bit. NCLT has cleared the next step in the company's demerger of the high margin commerce vertical, almost 50% of the company's revenue. Why is that? Is that needed at this point of time? We'll quiz the company about that as well. And JK Shah classes, as I mentioned, that the company had acquired, will be listed as a separate entity with that brand name. So you will have access to the high margin business separately, but doesn't make sense for the current shareholders is something that's important to note. Also, the shareholders, of course, are scheduled to meet on April 24, 2026, which makes it very, very timely at this point of time to speak to the management just before the meeting as well as before Q4 results. They have specifically mentioned now that they are aiming to simplify the structure, sharpen the company's commerce focus, and build the growth for their next vertical. And we'll continue to look if that makes sense for the future. Now, they have also mentioned that Professor JK Shah himself will be the chairman of the new entity, and hence gets that reputed brand name as well as the person behind the reputed brand name. Now, amongst others, the government coaching exam institution has looking to cross almost 100 crores of revenue as well. So this will be another growth vertical that we'll speak to about with the company, as well as the other aspect that South India focused test preparation for the government exams is a key growth vertical for the company at this point of time. They've also recorded the highest ever annual intake of 50,000 learners in the history of the company. And this, of course, has been a company that's listed for the last 3 to 4 years. And we'll show you the street cred as well as part of our KYC's 8 parameters. But largely, a strong growth driven by the offline, the online, as well as the residential formats for the company today. In terms of what we've seen in terms of the rating parameters, something that you viewers are familiar with, income statement will be something that we'll start with as well, and continue to look at the other ones as well, like balance sheet, cash flow, as well as the company's shareholding as well. Continue to look at the other key parameters as we speak about. Of course, the operational highlights is something that you have to focus on for this company. But move on, look at the other parameters. Shareholding is one. We've changed a little bit in terms of the return ratios because it is a loss-making entity on an annualized basis. So we will be looking at the valuations as well as focus on the important outlook for the company also. But as I look at the first parameter now, which is income statement, been a strong growth in the last year, FY25. Even when you look at the 3-year CAGR of 84% has been one of the major positives about this company. But when you look at the margins, largely been very subdued and has actually halved from the FY24 levels. Profitability has also taken a big knock in FY25, but this has improved in FY26. So there is some more resilience shown in this year. But because of what's happened, we've given the company a neutral rating at this point of time. But look at the FY26 performance. This is, of course, the latest quarter. Gone from a loss-making entity to a profit one. Look at the margins, though 32% is quite decent. But revenue growth will be something that we'll focus on with the company. If the growth of 30%, which wasn't maintained in Q3, if can be maintained in the whole year. Also look at the margin trajectory, shows you the perspective we showed about that FY25 was a dip. You also saw the challenges because of Baiju as well as what happened with that space, putting some pressure on the margins, but Q3 was a positive picture nonetheless. A neutral rating for now for the first parameter. When you look at the balance sheet though, that's the other key aspect. Because it's a loss-making entity, additions from profits don't go into the reserves. But still then, the reserves have actually increased in FY24, dipped again in the FY25 to 183 crores. So has been a bit volatile. In terms of the total equity, you've seen roughly a 250 to 350 crore range. But right now at the lower end of that, in terms of borrowings also, that has steadily increased. Now this was of course to fund the acquisition also. They've done plenty of them, but 2022 is when they acquired JK Shah. But largely the cash also has been depleted, and hence we've given the company a neutral rating because this position has improved in FY26, but neutral for now, even on the balance sheet. Let's look at the cash flow aspect of things now, because this is very important for a younger startup, younger platform company, and shows you that focus. Now from operations, you've seen an improvement, almost doubling in that sense from FY24 levels, FY23 levels as well. Profitability though has been a kicker in terms of weakness shown in FY25, and hence net cash flow has also been largely very stable, very volatile. Hence we've given this again a very neutral rating. Being a little bit conservative, I have to mention, because of what we've seen in volatility as well. But pardon me, look at the operational highlights now. Continues to be a very important parameter for the company, because the net enrollments have actually been quite positive at this point of time. So when you look at the FY23 levels, that has been increased. Or look at the last 2 years also, has steadily increased from 150,000 to almost 250,000 in FY25, and a huge jump of 328,000 in 9 months of FY26. So Q4 becomes yet again very important for the company. Shareholding again. So this is of course a thumbs up. Shareholding, because of the QIP done in this year, shows a dip in terms of the promoter shareholding. So let's go across, look at the next parameter now, and shows you the big dip of almost 20% for this company at this point of time. The shareholding, has largely been very volatile yet again as well. But look at the next parameter, that is Cred. It has been the other very volatile period, because the company's earnings have also taken a knock. The last 1 month, because of the Israel-Iran war, has been seen an impact across a bunch of companies, so down 23%. But look at the year-to-date returns also. It's steadily been very volatile, 26% downtick in the last 1 year. And very importantly, stocks trading at the same level of roughly around the 130 rupees that it debuted at back in 2021. So roughly 5 years of no returns for investors. The people who invested in the QIP in July of 2025 was at 236 rupees. So you saw 100 rupee downtick for the company, even from those levels roughly 9 months ago. And hence, we've given this, of course, a thumbs down at this point of time. When you look at the next parameter though, valuations, gets very interesting yet again, because you have now a listed peer in PhysicsWallah for the company. Now, PhysicsWallah, a known brand as well, had a decent listing, but since then also the momentum has faded for this counter. So when you look at the price to sales multiple, because they both are at this point of time not profitable, you look at a clear comparison and a clear win in that terms for Veranda. But we are investors, we look at multiple sectors, multiple opportunities, and hence you have to take into careful consideration the other opportunities available, especially in the platform in the new age startup space, the likes of the Eternal, likes of Swiggy. You are looking at PB Fintech. So the opportunity, while large, if it's lucrative on relative valuation, becomes the key question. And hence, for more certainty, we've given this a neutral rating for now. Finally, in terms of what could we expect, essentially in terms of the outlook for the company, multiple key aspects to look at. We saw the new learner additions have been quite strong. 1,000 crores in revenue is what they are targeting essentially at this point of time for FY30. Currently, roughly around 470 to 500 crores is what they did in the last year. 8 lakh plus enrollments by FY30 as well. Enrollment numbers have been quite strong. So this would be a very interesting to watch. And sorry, pardon me again. But the next one also, when you look at the key other outlook, has been on the EBITDA margin profile. Now, 32% that they did in Q3 could lend some more confidence to the company at this point of time, and hence becomes a very interesting aspect for them. But I spoke about the edtech opportunity being very frenzy in terms of multiple players that entered post the pandemic, and hence you saw the competition widening. Price structure is what everybody fought for, but now over the last 5 years, we've seen competition waning away in terms of what has been a very highly competitive space. Users, students, all of them have also likely gone to a more set formula in that sense and gone back to look at the established names because of the serviceability track record as well. So when you look at the final ratings for the company, let's pull those up for all those 8 parameters that we've put at as well and continue to look at this point of time. So in terms of the income statement, balance sheet and cash flow, we've given the company a neutral rating. Operational highlights have been positive, so we've given this a thumbs up. Shareholding, given the QIP, has depleted below the 50% mark. Is something that we here at KYC like the company in terms of having more than 50% ownership. Street cred is a downtake because of the underperformance of the shares, while valuation and outlook are 2 key aspects, and we will be honest here, given it a little bit of stringency in that sense. But overall, company comes up to a 4 out of 8. And we come at a very interesting time now to talk to the company. Suresh Kalpathy, the Executive Director and Chairman of Veranda Learning, is now joining in at this point of time. Mr. Kalpathy, thanks so much for firstly joining in, and a very good morning to you. You come at a very interesting time, right? Because on 24th April, the board is expected to meet a very, very key crucial meeting at this point of time. How are you looking at the company's performance over FY26 leading into that meeting as we look forward to what's the expectation from Veranda in FY27?
So for FY26, I think we are quite on target. Q4 has been a fairly strong quarter for us, especially going into the last month. We expect to be on target to cross in a combined basis over 500 crores of revenue and about 160 to 170 crores of EBITDA. So we are continuing to have strong performance across all our businesses, whether it's K-12, government test prep, or the commerce vertical under the branding of JK Shah classes. And of course, our occasional business, which is now combined with this NVA Veranda.
Mr. Kalpathy, also the one big crucial aspect has been the demerger of the commerce vertical. Now, a very, very high margin business, and you've spoken to us previously about it, but the rationale of demerging that business, and you've given a target of almost 1,000 crores in revenue by FY30. Does that include the commerce vertical, or will that be the non-commerce vertical which will be continuing to house under Veranda Learning?
So what we had projected is for our commerce vertical. And there are 3 key reasons why we are considering and we have been pushing forward on the demerger. The first is to create a very focused business which is focused on commerce. No better branding with a pedigree like JK Shah Commerce Education Limited. Professor JK Shah himself would be the chairman and CEO of the newly listed company. We expect that to happen sometime in June. With the projected EBITDA for that business alone at about 180 crores to 200 crores for FY27, we expect it to have a very strong listing. It's expected to achieve growth of about 30-35%. So it's expected to be a very strong listing. We expect that sometime in June. One of the key reasons that we had looked at for the demerger is, of course, as I mentioned, was a very focused business in commerce. Also from a fact that it is a space in which we have very few competitors, if you will. With even the last exams where we had over 190 ranks, which possibly is about 85-90% of the ranks in the CA exams, with a pedigree of a brand which is over 40 years old, and alumni who are today the who is who in the financial services space, with a high level of profitability, significant EBITDA margins, we truly have no competitor as far as the commerce space is concerned. There is significant investments that is being planned purely coming from internal accruals to continue to build out. And as I internally keep discussing, over the next 4 years, 5 years, make this the undisputed leader in the commerce space. We have always looked at the other spaces where people choose careers, whether it's in terms of the medical profession through need or government test prep for people wanting to become government bureaucrats, or for IIT JEE for people who want to become engineers. Those are spaces which, in a sense, we feel is fairly crowded with very strong players who are already there. In a commerce space, JK Shah Commerce Education would be sort of like an undisputed leader with pedigree and testimonial.
Fair point, Mr. Kalpathy. So do you feel at this point of time, the valuation that you're getting for Veranda Learning for both the commerce and the non-commerce vertical doesn't justify the moat of the JK Shah brand which you've acquired roughly in 2022? Do you feel that the valuation for the commerce business should be 3x, 4x of what you're getting currently in the markets?
I wouldn't use as strong a word as you mentioned as unjustified. But I think given the growth for commerce at about...
Referring to, the momentum on reforms has not come down at all. The finance bill also has elements of this reforms being pushed because we want India to be a lot more economically vibrant country. So that Reform Express is what guided us to bring in very many elements into the finance bill so that it reflects the mood of the nation. The guiding principle has been inclusivity, and we have made sure that every section gets to benefit from an opening economy. The approach also has been to look at every law that is there, every regulation or notification which guides certain activities, with an intention of making sure that we decriminalize, and the regulation is a soft touch regulation. So the finance bill has gone into drafting these kind of regulations which are very, very onerous and almost punishing. And we've tried to bring that to only being a compounding or levying of penalty and so on. So this, with this intention, we have made also newer changes which have been brought in to, let us say, ease passengers when they're getting out of the country or coming in with the kind of things that they bring in. We wanted to give them a favorable treatment. So many provisions of the Customs Act which will be impacting on people who are traveling abroad have also been tweaked in favor of the passengers. We are also providing for a foreign assets disclosure scheme, updation of returns even after assessment, reassessment proceedings have commenced, and rationalization of passenger allowance, which is what I referred to a minute ago. Besides this, the Custom Administration has already begun the reform process, simplifying process. In fact, I've said it earlier in this house, in 1 year, that is 2025, the Department of Revenue undertook reforming the Income Tax Act of 1961, coming up with a new act which is simpler, easier to comply with, and is also seen in the forms that we are going to use for income tax returns filing. The same year, the Department of Revenue in September did one major reform of GST, as a result of which today the markets are a lot more buoyant. You are able to see people buying things which they had postponed earlier because they were awaiting some kind of a change in the GST. Although from the time GST was launched till earlier than September 2025, we had already come down from 15.5 to about 11.2%. Post this, it has even touched 10, and probably in some items even lesser than 10. On an average, it's about 10. So you see that the Department of Revenue not only amended the Income Tax Act, but looked at customs, looked at GST, all within 1 year. A major reshaping of the tax administration has been taken up. So for small businesses and artisans, I think it was right that we removed the export value limits on e-commerce, making it easier to sell globally. And also overall, replacing manual checks with digital, faceless clearances to ensure faster, hassle-free movement of goods. So I think overall, the approach has been to make it easier for people to do business. So without getting into too much of detail on the finance bill, which the Lok Sabha has passed, and we've come here to take the views of the honorable members here, I want to start responding to some of the observations made by honorable members. Sir, I've not so much related to the finance bill, but honorable member Vikramjit Sani, who's probably not here now, had commented saying our systems are getting stuck, we are making plans but we are not able to execute it. What is promised in paper is not actually happening as delivered on the ground, and so on. I just want to refer the honorable member to the fact that we have brought in a single nodal agency system, which is a model for centrally sponsored schemes to improve spending efficiency by routing them through a dedicated and traceable account structure. So the fiscal public finance management system has gone through a thorough change, that it is now a transparent mechanism from where the money goes to the particular account head in a state government through a process called single nodal account SNA Sparsh. Sparsh actually ensures that money goes just in time to the accounts, and money is sent when the state government also puts its share, and without delay both together get to the ground. And therefore when the utilization certificates come back to us, we give the next tranche, and so on. So no project waits for resources to come. Equally, we don't park money in programs in the states and say or periodically check up if the money is getting spent, because after all, many of the projects and many of our expenditure is now based on borrowed money. We want to borrow just enough to take care of our work and not borrow much more and then keep paying interest. So this SNA Sparsh, in which all the states are on board, ensures faster release of funds, better visibility for utilization, and reduced parking of public money. So this push-based system that we've now brought in actually enables funds to go to the last mile, and it can be tracked and traced at any point in time, both by the central government and the local body, and also the central state governments. So this just-in-time has actually helped us. Now, we have not left it at that. In the budget documents, there is a statement 4AA, capital A, of the expenditure profile that we produce every time during the budget, which actually gives a comprehensive state-wise and scheme-wise breakdown of the actual releases that are made of funds for the centrally sponsored schemes. So it is not just digitally transparent for all of us to see, state government, central government, and also the concerned department at the state level, but it is available as a document in every budgetary set of documents that we produce for all members to see it. So this system has actually helped us to prudentially use money without wasting it. So I think Honorable Member Sanjay Yadav had spoken about decline in public sector employments and employment opportunities, including in railways and defense. Sir, I think it's a bit ironic, sir, member, sorry for making a political statement, but sometimes it helps because the comments which are coming are also politically motivated, I feel. A member from RJD speaks about public sector employment and says, no, it's not happening. We cannot, the land, what is that, land for jobs recruitment scam? Yeah. We are not doing that. We are not doing, give us land and therefore we'll give you jobs. It's all transparent, it's put out. And in fact, I will appreciate the railways for having come up with the annual recruitment calendar. 25-26 was already released, and at that time it started off, ensuring that youth no longer have to wait for a single notification to come. The calendar is already announced. And also, 18 Rozgar Melas under the leadership of Prime Minister has taken place since its launch in October 22. Like the way we periodically give Kisan Samman Nidhi for the farmers through direct benefit transfer. Here is a job, Rozgar Mela, which periodically appoints people publicly. Letters of appointment are given by ministers going and participating in different states, by Honorable Prime Minister himself standing up and saying, I'm giving this straight away. And that calendar keeps moving in a very dynamic fashion. So we are creating jobs, and it has resulted in public sector, Government of India, it has resulted in distribution of over 11 lakh appointment letters, publicly seen by everybody. And we are obviously giving jobs to the deserving, sir, not just for those who are giving us piece of land. We don't want the land. Nor are we picking up land for giving jobs. So, and also the recruitment drive is part of the Railways annual recruitment calendar, I said already. And that has been introduced in 2024 for Group C posts. So it's all publicly laid out. Railways and Defence are openly, publicly recruiting and announcing the recruitment details as well. There is no hide and seek in that. Sir, Honourable Member Shakti Singh Gohil raised a lot of questions about new standard of the GDP numbers. The new standard to belittle previous numbers so that my number may look good. And in this series, you have revised the GDP numbers to belittle the previous numbers. These are routine exercises in the government. I'll tell you the number of times Government of India has done this, and not randomly. It goes systematically, sir. 9 revisions since independence have happened. Governments of every political persuasions have done this. The first base year of 1948-49 was released in 1956 under Prime Minister Nehru's Congress government, followed by 1960-61, which was released in 1967, and 1970-71 base year was released in 1978 under the Janata Party government under Shri Morarji Desai. Rajiv Gandhiji's Congress government released the 1980-81 base year series in 1988, and Shri Vajpayee under the NDA government released in 1993-94 series in 1999. Dr. Manmohan Singh carried 2 revisions, releasing the 1999-2000 series in the year 2006 and the 2004 to 2005 series in 2010. The current outgoing 2011, the one which is going to be replaced by the latest series, the current outgoing 2011-12 series was released in 2015 under Prime Minister Modi, and now the 22-23 series has already been released. So this happens every 10 years. I'm sure Honorable Member Shakti Singh is not suggesting that every previous revision was to taunt the earlier governments. No, this is a process of governance. It happens under every government. So it gives us, it's not every time, I'm sure, and I confidently believe that every time it's not for belittling the predecessor governments. They are done because it has to be, the base has to be scientifically tested, statistically proved, and then kept on. So this new series, several new and improved data sources are being used to bring in granularity, accuracy, and reliability of the estimates. More than 300 data sources and about 1,400 variables are all used to make this GDP series, and it captures household sector information also, because now it uses the annual survey of unincorporated sector enterprises, ASUs as we say it, and the PLFS, the Periodic Labor Force Study Survey, are all used for better picture of the economy. Also now we have the advantage of the GST data which shows where companies are operating and their output is assigned to the right states accurately. So the data has now become a lot more comprehensive, lot more vibrant, and lot more true to the time in which the data is being extracted. The PFMS real-time data actually reduces errors. So you're not coming up with a number which probably will need a further correction or the margin of error is higher. No, now you're able to get even better, avoids delays, and makes GDP estimates more accurate. So we are also using the e-Vahan, rail and air transport services data and fuels related data so that greater value is, we are able to estimate better value for the goods and services. So the new GDP series is actually reviewed, peer reviewed by many observers of the Indian economy. They didn't have a reason to worry about it, but I want to request the member to have greater in-depth look into what has come out. So then gender budget has been completely cut out, is meaning removed or not even considered, is a view that Honorable Member Wilson has expressed. I just want to highlight, sir, overall allocation under gender budget has increased from 4.49 lakh crores in 25-26 BE to 5.02 lakh crores in BE 26-27. So with
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that.
Retirement is something everybody looks forward to. At least I think so. If you think about it, you're dreaming about kicking back on a beach or breathing in the clean air of the mountains, and all the while your money is working for you. The magic of compounding is something that everyone's talked to you about, but it's different to actually see it in action. But then timing is everything, isn't it? If you were retiring 2 years back, we wouldn't be having this conversation. In fact, 2 years back, we were having conversations about early retirement. Today, with geopolitical tension being the new normal, the question that I'm asking is how you should adjust your expectations and your strategy if you're set to retire either this year or in the next couple of years. This is Money Wires on NDTV Profit, and I'm Alex Matthew. Joining me today is Vishal Dhawan, the founder of Plan Ahead Wealth Advisors. Vishal, thanks so much for taking the time.
It's my pleasure. Thank you for having me over.
And do you agree with that? I think, if I'm not mistaken, we've had conversations about FIRE and about retire early, and the entire conversation landscape, so to speak, has shifted, and people's expectations have shifted.
Oh, certainly. I think the last 2 years have been a great leveler, if I may call that.
Yeah.
And I think, the interesting thing is the questions even now very often are probably questions that will probably have lesser of an impact if you think about them. So I think the question that really everyone's asking right now is what happens next in the war, what's going to happen to markets, etc. I think the question that they really have to answer is what is the resilience of my retirement portfolio to all of these events that are happening around. Today it's geopolitics, tomorrow it'll be interest rates, day after tomorrow it'll be some health issue that will come up. And I think at each of these points, while the trigger may be different, the question still needs to get answered saying, can my retirement portfolio really take me through the next 20, 25, 30 years? And can it do so in all kinds of scenarios rather than just being optimistic about the future or being pessimistic about the future? We need to find the ranges of outcomes that can be possible.
You're calling it a retirement portfolio, and I find that quite interesting because you've put a label on it. It's not just your investment portfolio, you're calling it your retirement portfolio. Why make that segregation?
So I think it's a very interesting thing that somehow what ends up happening is we're all creatures of habit. And what ends up happening is for a lot of people who have started investing in their 30s, 40s, now getting to their 50s, early 60s, they're all used to a certain set of experiences that they've had on their investment portfolio while they were accumulating. As you get to retirement, all of a sudden you now get into a decumulation phase. And suddenly you now have a new challenge to deal with, which is earlier on, because you had other sources of income, you simply went out and said, I have another source of income, markets are going up and down, every time it goes down, I will take some money and put some more and get the advantage of compounding. When you get to retirement portfolios, you have a different challenge. You're now going to have withdrawals happening at the same time as markets are doing what they have to do. And therefore, when you withdraw from a portfolio and it's down, you have no way for that money to come back in terms of growth, because that money has already got out of your portfolio and got consumed for something that you needed in your retirement. So I think there is a need for investors to shift gears in their mind as well and in their brain. So it's not that they need to do this abruptly